Welcome, everybody. The May 31st, 2024 Oregon State Lottery Commission meeting is now in session. Today's meeting is being live streamed on the internet and a link is posted on the Oregon Lottery website. It's noted for the record that a quorum of commissioners is present for today's meeting. Please call.
Commissioner Patel,
Here.
Commissioner
Here.
Commissioner Wilcox,
Here.
Chair Sahoff,
Here.
Members of the public have had an opportunity to provide written public comment to the commission this morning. But I don't believe we've received any. Can please confirm that no public comment was received?
That is correct. No public comment has been received.
Thank you. Okay, with that, let's start the agenda and begin with the director's report.
All right. Good morning, Chair Sathoff, commissioners. Thank you for being here in person today. It's great to see you all. I'm going to start with some lottery news. So over the past month, we've been celebrating our $1.3 billion jackpot win in Portland. By far the largest win we've ever seen in Oregon. So it's been pretty exciting. We had not yet revealed the names of our three winners at the last commission meeting. And by now you've probably heard and seen a number of stories on the news. We held a press conference event introducing one of them, Charlie Safin, and allowed him to tell his touching story, which really has spread across the country. It's been great for Oregon to see us in the national news everywhere, and for Charlie's story to get out. He was impressive at the press conference, and it worked out really well for everybody. So we're super excited about that. Again, a huge milestone for Oregon, and most of the rest of the lotteries across the country are a little jealous that this happened here. So following that event, staff and I presented the $100,000 bonus check to the Plaid Pantry for selling the winning ticket. And we also gave out some free scratch-its for several hours to customers at the Plaid Pantry. So that was a fun event as well. You may have also seen that Lottery issued a news release warning of scams following the announcement of the winner. We did this after security learned of a text message that was circulating saying that the winner was going to pick 10 people to give his winnings away to. So that is not true. And we put a public service announcement out to ensure that people were not scammed by that. So our security team and our communications team got that out on social media and also news release. Moving on, every year the state of Oregon celebrates Public Service Recognition Week, May 5th through 11th, taking the opportunity to thank public employees for their service by seeking nominations for the Ambassador of Public Service. For this year, the theme was Operational Excellence and sought nominations for employees who embodied accountability, equity, excellence, and integrity. Christina Dampshin-Spina, Elizabeth Ellers, and Tyler Rector were all chosen by their peers to be the 2024 Ambassadors of Public Service for the lottery. Christina is a senior manager for IT governance, has created a culture of safety, team bonding, and continues to lift up her fellow IT employees with her communication style and her patience. Elizabeth, one of our supervisors in retail channel, has been with the lottery for over 20 years, has a reputation for quality customer service and collaboration with lottery staff, along with being a great change champion. Tyler, a lead customer service specialist, was nominated and recognized for his hard work on assisting with a transition to a new software platform, which included being a positive force with his team members. So I want to thank all three of them for bringing their best to lottery and congratulate them on their award. Moving on to some sales updates. Our traditional game sales are trending upward overall by about 5.3% from last year. We've had 3 Powerball jackpots worth $1 billion or more compared to just one last fiscal year, which is the primary driver behind Powerball's 32.3% increase year over year. Mega Millions is nearly even with a year over year sales as that game has had $2 billion jackpots. Scratch-It sales are slightly ahead of last year by 0.8%, and forecasted to be up by about 1.5 by the end of the fiscal year. Video lottery is holding around the same as last year, with sales up just under 1%. And Sportsbet continues to have strong performance, up nearly 35% over last year. Some winter stories. Retired first grade teacher and librarian Janine L. and her husband Larry of Eagle Point often spend their date nights scratching off their tickets together. On a recent night, after taking turns scratching off each number, Larry discovered they won the top prize of $100,000. The two will be celebrating their 56th wedding anniversary in June and plan to pay off their car and splurge on home improvements and landscaping. Bernetta O drove from Medford to claim what she thought was a $1,000 prize for the legendary crossword Scratch-It. But when she came in, she screamed and fell to the ground after learning the ticket was actually a $50,000 winner. She was so happy, she took photos beaming with her big check and also asked to take photos with our staff. So those that were here that day were pretty surprised. That was pretty exciting. Twin sisters Jennifer and Amanda were having a fun night out at the Tyrone Creek Bar and Grill in Southwest Portland when Jennifer hit a $1,500 jackpot playing video lottery. It was her first win ever, and she was excited. Brought everyone in the bar a drink after her win. She's planning to use the money to do something fun with her sisters and pay some bills. And with that, it concludes my director's report for this month.
Questions or comments from the commission?
I have one follow-up.
Okay.
Sorry. On the scams, we got messages out quickly. What I didn't hear, did anybody actually get taken? I mean, it sounds like we were very quick at dealing with this.
Yeah, not that we know of.
Okay.
So hopefully we precluded that from occurring.
So our process seems like that was pretty tight.
Yeah.
I
Yeah.
thought it.
First we heard of it was on, I believe, on a Sunday.
Mhm.
We had some messaging out that afternoon. So
That's what I thought.
yeah,
So
it was quick.
really good job. That's all I have. So,
Thank you.
okay. The minutes of the previous commission meeting have been circulated to the commission in advance of today's meeting. If there are no changes to the minutes, is there a motion to approve?
I move that the minutes of the Oregon State Lottery Commission meeting held on April 26, 2024 be approved as final as presented today.
Do I have a second?
Second.
For the record, the motion is passed. Oh, sorry. There. I told you
Aye.
it was gonna be wrong.
Here.
Yes. And now, for the record, the motion has been passed. Okay, let's move to the financial report and Monique. Monique, tell me again how to say your last name.
It's Favre.
Favre.
Yes. Right, nice to see everyone in person. All right. Good morning, Chair Sathoff, Commissioners, Director Wells. For the record, my name is Monique Favre, the Financial Reporting Manager for the Oregon Lottery. I am presenting on behalf of Chrissy Comas, the interim CFO. Today, we will go over the financial report for the month of April and also for the year-to-date fiscal year 2024. April net revenues are $125 million on a budget of $122.7 million, generating a favorable variance of $2.3 million. Net revenues year-to-date are $1.201 billion on a budget of $1.189 billion. This is a $12.8 million favorable variance to budget. For the month of April, total gross wagering was 1.2% less than anticipated. Traditional gross wagering exceeded expectations by 18.9% or $6 million as players purchased tickets for the April 6th Powerball drawing, which offered a $1.326 million jackpot. Sports gross wagering is strong and over budget by 13.7 million or 23.8%. For April, the strong traditional and sports net revenues compensated for the unfavorable variance in video, allowing April total net revenues to remain close to expectations. Year-to-date, net revenue shows a similar pattern where video net revenues are lower than expected, but covered by increases in traditional and sports wagering net revenues. Net profit for the month is 81.6 million on a plan of 77.7 million, creating a favorable variance of 3.9 million. Net profit year-to-date is 771.4 million compared to a budget of 725.8 million, causing a favorable variance of 45.6 million. April favorable net profit from operations was driven generally by net revenues from the traditional and sports products, as obviously discussed, while there was a direct expense favorable variance of 3.4%, it was offset by negative indirect revenue. The securities we hold to fund future prize installments decreased in value, causing negative indirect revenue. Let me stress here, this is an unrealized loss and all securities will mature at their face value despite any market fluctuations during their life excuse me. Year-to-date, favorable net profit from operations drivers are net revenue, interest earnings, and savings in indirect expenses. Noteworthy variances to mention include retailer commissions. For April, the traditional rate variance was about 40% of the unfavorable variance. As expected in March, prize selling bonuses, which are part of the commissions, were recognized in April as prizes from sales in March towards the April 6th jackpot were validated. This variance is added to the negative variance caused from the budget rate being too low. A video rate variance occurs as retailers progress through the commission rate tiers faster or slower than expected. For April, the actual rate was 1.46% and the budgeted rate was 1.58%, contributing a positive variance. Year-to-date, the actual rate is 1.723%, which is essentially the same as the budgeted rate of 1.721%. The April advertising variance is the result of campaign expenses being recognized in March, but were anticipated in the budget to be April expense. Recognition of actual expenses when compared to budget expectations is impacting the year-to-date difference as well. The monthly variance for game equipment parts and maintenance is related to a licensed property game that was received in April instead of March as budgeted. I'll pause there and just see if there's any questions.
Questions or comments? Monique, I'm trying to figure out if I'm getting a trend here. Not maybe the first time, but infrequently we have always a net profit, but a lot of it is because we do some underspending. I'm feeling like in April that we're really doing a lot better job of, this was our expected budget for expenses and we're meeting that. And so that our revenues is being driven by the top line, largely in this one. Am I reading all of this
Yes,
correctly?
I would say that is one thing to note for sure. I think a lot of areas looked much better for April or what we would more expect.
Right.
But of course, then we have such, in a few, major areas, we have such large
Yeah.
favorable variances year to date. So some
Right,
of
like
it,
public information.
yes, and
Right.
technology expenses and some of, like we
Yeah.
said, some of the indirect expenses.
And some of
specifically.
those that are extremely large, I don't know that I'd say they're timing. There may be more that we just need to adjust going forward as to what we believe we'll be spending in that, or is it timing? Let's
Well,
take public
yes, I
information.
would agree. I think there's areas where we really need to look at what's been identified as the budget amount for this coming year and determine, is that
Right.
actually what we expect to spend,
Right.
right? When it comes, and there's challenges as we talk about
Yeah.
projects, some of the bigger initiatives, that's not always easy, right, to
Right.
predict.
That is a
But
timing.
I do think there is, the way that we spread budgets across the year, we basically allocate, sometimes a lot of it gets allocated evenly across the year. Well, then that gets tricky. That
Yeah.
creates all these timing things that we all get to talk about every month. And that's one thing that definitely accounting is looking at. But at the end of the day, I think it really comes back to having the best information we can possibly have on the front end. So we're budgeting correctly and allocating that budget as
Yeah.
accurately as possible. And we need both of those in order to help see this properly. In the
Well, certainly in
financials.
April, that's what I'm seeing.
Yes,
some-
there is, it
that-
was a relief. I mean, it was
Yeah.
nice to see that, there's a matching there that we aren't
Yeah.
usually quite so close. So
Yeah.
it was, definitely positive.
So great job, everybody. I guess I- Okay,
Yes.
go ahead.
All right. Please review the comprehensive variance analysis provided in the commission packets and public meeting materials for detailed explanations of the monthly and year-to-date differences between the budget and actuals. And from there, I also have the balance sheet for your consideration. And happy to answer any questions that you might have.
Questions, comments from the commission? Okay, maybe I'll get it right this time. Is there a motion to approve the financial statements?
I move that the Oregon State Lottery financial statements for month ended April 30th, 2024 be approved for the record as presented today.
Do I have a second?
Second.
Will the clerk please call the roll?
Commissioner Patel?
Aye.
Commissioner Wallace?
Aye.
Aye.
Zappa?
Aye. For the record, the motion has passed. Okay. And let's move to Josh Leonard for the lottery revenue forecast.
Morning, everyone. It's great to be back with you. Once a year, sort of just do an update on the economic and forecast and lottery forecast. For the record, Josh Lehner with the Office of Economic Analysis, and we are part of the Department of Administrative Services, and we do the economic and revenue forecasting for the state and partner with Lottery for some research stuff that I'm here to share a little bit with you all about later on here in a few minutes. But first, I wanted to start with a high-level look at the economic outlook that we just issued on Wednesday to the legislature before we get into the lottery stuff. And I'm going to turn off my video. No one else is on video, and save bandwidth and that sort of stuff. So here we go. Share screen, slideshow. Yeah, so our latest outlook for their June, it's called the June forecast, but we released it in May. It came out this week, and the challenging part, it's good news and bad news, is that the economy is still humming, right? We're still in this inflationary economic boom. The economic boom part of it's great. The inflationary part is not so great. But you know, it's really hard for something like the Federal Reserve to cut interest rates when inflation is not close to target. Right now, the Consumer Price Index, you can see on the right, is running basically at a 3 or 4% annualized pace. The PCE price index, the Personal Consumption Expenditures Index, is different than the CPI, and it's actually the one that the Federal Reserve targets. It's running more like 3% than 4%, but still noticeably above the 2% target. And so when the economy is still running at above potential growth rates, you know, jobs, income, spending are all keeping pace with inflation, actually a little bit stronger than that. You know, it's hard to reduce rates for the Federal Reserve. And so they have bumped out, we've pushed out the assumptions on when interest rates will be reduced, pushed it towards the end of the year, right? At the start of the year, it was like the Federal Reserve said they'd cut interest rates 4 times this year. Financial markets priced in 6 rate cuts for 2024. And so far we've had 0, and it's looking like maybe we'll get 1 or 2 by the end of the year if all goes according to plan and inflation slows further. But of course we'll see. This isn't necessarily a challenge for the economy. If the economy is strong and household balance sheets are strong and corporate balance sheets are strong, you know, higher interest rates for a longer period of time is probably what the economy needs to keep inflation more at bay, and we don't have massive run up in prices like we did earlier in the pandemic. But of course, higher interest rates do have impacts, and especially for those who need to borrow, who have current debt levels that need to be refinanced, or maybe looking to take out a loan for new capital expenditures or things like that. That can certainly cause operational challenges and affect balance sheets in that way, which is something obviously state agencies are looking at for capital expenditures and the like. Here in Oregon, we're not really adjusting our economic forecast today relative to recent forecast as well. A key thing here would be the population outlook. During the pandemic, we certainly saw a slowdown in population in Oregon, and potentially population losses as well. We have differing estimates, which makes it more challenging, where the estimates from Portland State University show basically slow growth over the pandemic era period as a whole. 1 year down, 1 year up, 2 years up a little bit, like not a lot of growth, but slow growth, versus the Census Bureau estimates, which are the gold bars there, which show a couple years of population losses. We don't have 2024 data yet. We'll get 2024 data this winter. In November and December, we'll get the new set of population estimates. And you can see our forecast in our office for Oregon's population moving forward is very slow. 0.6% annualized rate over the next 10 years, which is essentially unheard of in Oregon's history. We're a boom bust state, and during the booms, and we're in an economic boom today, our population growth, is typically more like 1 or 1.5% in recent decades, closer to 2 or 3% historically prior to that. And so this is a different economic environment. And right now, there's a lot of discussion about what that outlook could be. This feeds into everything our office does, from an economic perspective, a labor perspective, an income perspective, a consumer spending, and the like. And so we're having slow growth as our most likely scenario. We have to be open to the possibilities that slow growth might not materialize. Maybe there's some sort of permanent shift in migration patterns across the state. And Oregon's fully reliant upon net in-migration to grow our population because our deaths outnumber births in the state. Our fertility rate in Oregon is bottom 5 in the nation. It's been declining for 20 years now. And so if people aren't moving to Oregon in greater numbers than are moving away, our population will decline. Not quickly, but slowly. And so that has a massive impact on these longer run forecasts for the state. And so we're not changing this forecast yet. There's some discussions about faster population growth, and especially at the national level. Some folks are raising their forecasts for international immigration at the U.S. level pretty sizably too, which means the U.S. economy will be bigger and stronger than previously forecasted, which is good news. The challenge here is that, how much of that would show up in Oregon. And given we haven't seen migration rebound so far in recent years, we're not changing our local forecast just because the U.S. population forecast got stronger. We might do that in the future, but we first need to see things actively turn around in Oregon before we start building in those factors. And so that's something to keep an eye on, but potentially better news on the horizon if we see population growth rebound. The last thing to note from an economic perspective, and probably from a player-based perspective as well, is the ongoing shift in the demographics of the state. Oregon is becoming more diverse. Younger generations are more diverse from a racial and ethnic perspective than older generations. And also the foreign-born workforce has been increasing at a faster rate as the large baby boomer generation, which is predominantly U.S. born, is retiring both in the last decade and in the decade ahead. And so this generational shift in the economy is ongoing. And especially if we get more international immigration to the U.S. as a whole, it'll be maybe even a little bit stronger than currently is built into our outlook.
Josh,
When it comes, please.
I have a question on the population side. Historically, in-migration has been, I think, significant in terms of our population growth. It looks like in-migration is slowing. Do we know why that is? Or do we have any thoughts on that?
Yes. So what I would say is, if the data we have available would show that the in-migration, the people moving to Oregon, has been relatively steady for the last decade and is actually fairly steady during the pandemic. We didn't really see a drop off in people moving to Oregon. What has changed is the number of people moving away from Oregon. That really picked up during the pandemic. If we look at the census data, the gold bars there, that's what changed. And so it's a little hard to disentangle exactly what it is, right? Moving is a very personal choice, right? It's like, where do I think the best opportunities for me and or my family are for my future? That's, jobs, certainly part of it. Housing is part of it. If you look at where people have moved to, the vast majority of people moving away from Oregon have moved to more affordable locations. That, I think there's a lot to that aspect of it, but I also don't want to discount the other reasons that people move, because again, it's personal, whether it's social or political or tax related or quality of life related or whatever the case may be. I mean, we're complicated people, and so I think all of those things go into it. But I think at some level, there's clearly a jobs and working from home and housing affordability that underpins it. Not that those other factors don't come into play; they certainly do. But some of those the impacts of working from home and housing affordability is very clear in the national migration data as well, not just in Oregon. But I think that's the biggest chunk of it would be for that.
Thanks.
And then the last thing to note on the migration now would be, what I would say is even in 2022 data, which was the largest losses we've seen in 40 years, some of the only losses we've seen in 40 years, Oregon still saw a positive net in-migration among young adults, 18 to 24 years old. And it wasn't just about the universities. It wasn't like it was Eugene and Corvallis. It was at the statewide level and not just driven by that. And so that is really been Oregon's historical comparative advantage, is getting the young adults moving to Oregon. And even during the pandemic, that still occurred, at least in the current data. So that's encouraging moving forward. What we lost were more middle-aged households and young families and things like that, not the single young adults, but more the families moving out. And so that also has economic impacts. But as long as, if we can still attract the young working age individuals, eventually they'll start their careers and set down roots, and eventually they'll get married and have kids and buy a house and all that sort of stuff that you traditionally do over your life cycle. And so that's maybe the one silver lining in the census data that we can have. And so for now, that's relatively encouraging. And we do think, again, the outlook is positive, just not as positive as it has been historically for a lot of those same reasons, where working from home is not going away. Housing affordability is still worse here than in most other states and things like that. And so I think there's some permanent impacts, but not entirely negative forever.
Thanks.
I have a little bit of a comment or a question, Josh.
Please.
Regarding the younger 18 to 24 coming to Oregon, do you think that's because of availability of jobs more here, or that being better here than it is in other parts of the U.S.?
It's a good question. If you look at surveys of why people move, the number one thing is always jobs, right? And so that's what makes this population slowdown or losses overall a little bit different than what we saw in the 1980s when we lost population. This is not an economic thing, right? Jobs are plentiful here, right? We're at record high employment. We have high vacancy, higher job openings. And so there's plenty of jobs. There's also plenty of jobs in every other state, right? It's a tight labor market nationally. And so this population pattern is not driven by job loss like it was in the Rust Belt or has been in Oregon historically, that sort of thing. It's driven by something else. Pandemic, and again, maybe all of those other, social type factors, could be playing there. And so why are the young adults still moving here on net? That's a good question. And some of that's just, where do young people when they graduate high school or college want to live? And more of them chose to live in Oregon like they have historically than move away. So I think that's encouraging, because part of that is also based upon not just outright job availability, but beliefs and sentiment about where would be a place I'd actually want to live, right? at least I'll speak personally, that was a thing for me when I was graduating college, is like, where do I want to live? And growing up in the plains, I was like, I want to move to the West Coast, like that sort of thing, right? Like, so that belief is still there in positive territory, at least among young adults.
Thanks, Josh. We're trying to think about, we are probably quite a bit cheaper than California in terms of housing and whatnot. So thank you for answering that for me.
Yeah, of course. And then I have two more economic slides that are trying to touch on some differences between the top line macro type numbers versus the micro, like what's happening at the individual person or household level. One of them is the overall job growth in Oregon on the left is for the entire cycle, we're close to middle of the pack, right? Normally, Oregon, we're more volatile. Our recessions are deeper and our economic expansions are faster than the typical state. This cycle is different. Our recession, the job losses associated with the pandemic and the shutdowns was average. We were right about the typical state. Our initial recovery was pretty average, but then it's really slowed down in the last 12 to 18 months. We're bottom 10 in the nation for job growth in the last year, which is unheard of for an economic expansion. I don't think we've ever been in that situation necessarily. And so the top line job growth has not been particularly strong in the last year. But if we switch to the chart on the right, I think some of that has to do with the population slowdown, where on a demographic, the labor force participation rate is the share of people in Oregon that either have a job or are actively looking for work. So they either have a job or they're officially unemployed, where they're looking for work. They're not out of the labor force, right? Being out of the labor force, maybe you're in school, maybe you're staying home to take care of the kids, maybe you are sick or have an illness or a disability, or you're retired, right? Those are reasons why you wouldn't be in the labor force. And it's measured as all population 16 years and older. And so that means as we see a larger and larger share of our population reach retirement age and enter into retirement years, the labor force participation rate declines for demographic reasons, not because the economy is weak. And so we compare the actual labor force participation rate, which is the solid thick blue line, with the dotted line is our estimate of a full employment economy, where you take into account that aging population. And so the labor force participation rate should be down over time because of the age structure and demographics. But you'll notice today, we're back, the solid line is next to the dotted line. And so we're at full employment. Our labor force participation rate, the actual share of our neighbors that have a job or actively looking for work is as strong as it was back in the 1990s. The only reason it's down is because of increased retirements. And so that's something that's really important, right? So we've seen slower job growth in the last year, but we've seen a record high employment rate among 25 to 54-year-old Oregonians, and this overall labor force participation rate over the entire cycle in recent years has increased the second most out of all states across the country, right? And so at least for the Oregonians who didn't move away, the economic outcomes today are as good as we've ever seen, right? And so that's something that's keep in mind, is like a lot of times we care about the top line growth. How are we ranking in terms of jobs and income and that sort of stuff? That's really important, and that will drive overall, revenue trends in the state. But we also care about actual economic outcomes for us and our neighbors and our families and that sort of stuff. And those have been really stellar based upon the current reading of the data, both from a jobs perspective here and in an income perspective here. Again, starting with the macro on the left, overall personal income in Oregon, this is all income earned by all Oregonians, on an inflation adjusted basis. And you can see we had a surge earlier in the pandemic. A lot of that was the federal aid, right? The pandemic, the recovery rebates, things like that. Then we had the surge of inflation that followed all the money, and our real income dropped, right? Our standards of living declined because our income growth was not keeping up with the prices and the cost of living. But in the last year, as inflation has slowed some and our income growth has continued, real income is growing again. Our standards of living are rising, but you'll see we're still below our forecast from pre-pandemic, right? On an inflation adjusted basis, because of the high inflation environment we've been in. So like from a macro perspective, incomes are up, but they're not up quite as much as inflation over the 3 or 4 year period, and we're below old, previous forecast expectations. And so that impacts consumer behavior when the cost of necessities, whether it's rent or gas or food or going out to eat, that sort of stuff, right? The prices are all up, and we have the money to afford to do it, but not necessarily to do more of it in aggregate, so to speak, than given the incomes and the prices. So that's the situation at the macro level on household finances. But our relative position, the actual income earned by Oregonians, chart on the right, we're at this highest vantage point we've seen in quite some time. Per capita personal income is just kind of average income, right? We're still below the United States, but we're basically at our highest point we've seen since the mills started closing in the 1980s. And the average Oregon wage earned by workers is still lower than the US average wage, but we're at a literal high right now. And in recorded history, going back to 1969 is when that data set starts, we've never been at a higher relative vantage point in average wages compared to the rest of the country. So again, on a per worker or per household basis in Oregon, our labor market outcomes are great. Our wage and income outcomes are great. They're the best we've seen in a really long time, but our top line growth from a jobs population perspective are middle of the pack or lower. And so that dynamic there is something that our office is really paying attention to. And again, it's really those top line numbers that drive overall revenue growth in the state. And so we're just trying to maintain these and think about them and what those implications are moving forward. And a lot of it ties back to that population discussion. And so we'll monitor that. We
John,
monitor that all the
is
time.
Personal income, the forecast on personal income, is that being driven by the prior information you gave about the labor force participation? I guess what I'm really asking in layman's terms is the forecast for personal income going up because our belief is that more and more people will get jobs or are participating in the job market?
Yeah, that is the majority of it. I don't have the exact percentage off the top of my head, but wages, are 60 in the 60% range of all personal income comes from wages, right? So a lot of it's tied to that. But there's proprietor's income, so small business, business income. There's transfer payments from the federal government, so Social Security is included in that, which is a growing share. So like Social Security is going to be growing at a faster rate given the demographics in the aging population, but it's a smaller component. Wages are by far the largest component here.
Do you forecast the kicker in this at all? When you do this personal income, this sort of do you look at kickers going forward in time? Or do you just exclude those?
Yes, so kickers would impact the disposable income. Disposable income is total personal income minus taxes, and the kicker is a tax credit. And so it wouldn't impact total income. It would impact disposable income once you account for the effective impact on taxes paid. And so we don't build our forecast we do have some disposable income forecasts, but we don't, we generally rely on the total income when we create the personal income tax forecast. We don't project future kickers, right? The kicker is a biennium forecast calculation. And our expectation every single time is there won't be a kicker. But of course, now we're 6 biennia in a row where there has been a kicker or is expected to be a kicker. So
disposable income. Thanks.
Yeah. So that's setting the stage from the high level sort of economic vantage point. Population, jobs, income are all looking good and expected to continue to grow up until whenever that next recession comes. We don't have a recession in the baseline right now. The outlook, with the strong economy and the inflation that has slowed some, that's encouraging. We'll see if we're out of the woods yet on the recession risk and how the Federal Reserve responds to inflation as we get the monthly reports over the next handful of months. From a lottery perspective, wanted to start with this high level high level look at the current biennium now that we're halfway through the biennium. I know there's a lot of numbers and tables are hard to read, especially in a presentation, but the main point here is that halfway into the current budget period for the state, revenues are closely tracking expectations from this high level vantage point, but there's interesting, important things to note that are happening underneath the surface here. The first is that traditional lottery has been coming significantly in. It has been coming in significantly above forecast in the past year. 19% above forecast, or the combination of actual tracking plus our forecast for the second year of the biennia is up 19%. Sports betting's up even more, right? It's up 32% relative to the expectations a year ago when we issued the May 2023 forecast, which the legislature set the budget to. So those increases are sizable and noticeable, but they're effectively offset by video lottery coming in below forecast, right? That there's been growth, there's been stabilization followed by growth in video lottery. It's only underperforming the forecast. It's not underperforming like relative to prior sales or anything like that. It's been solid sales, but our forecast was for a bit stronger growth than what we've seen. You put those things together and we're basically effectively perfectly on target overall for revenues for lottery in the past year. And then they're up overall because of the administrative actions taken by the agency, about a year ago, where some savings and some balances from the prior biennia were then transferred to the state for general revenue purposes. The legislature could spend that. That's additional $9 million. So that's basically all of the increase and all of the change on net over the past year has been in those administrative actions taken by the agency to help with revenue. So again, overall on track, doing well. Sales are meeting expectations in aggregate. But the composition here has been something that's been ongoing over the course of the year. And we've been adjusting our forecast a little bit every 3 months, where it's like sports betting's up a little bit, videos down a little bit relative to expectations, not down outright, but just a little bit slower growth than anticipated. And then I have a couple slides on video and a slide on sports before I'll be finished with my prepared remarks. The first thing to note is video sales. Again, they're healthy, they're growing along with the economy, but we've seen interesting pandemic patterns where we saw record levels of sales during the reopening back in 21 and 22. People were cooped up. They had this increase in disposable income with the pandemic recovery rebates, and we hadn't done things for a while. And so, and other forms of entertainment were limited, right? We didn't really get on airplanes for a while. We didn't really go to sporting events. We couldn't go to sporting events for a while. Those were, there was no fans in the stands and all sorts of stuff. We didn't go to movie theaters. We still haven't really gone back to movie theaters in great numbers. So some of those other forms of entertainment were limited. But we would go out to eat. We would go to our neighborhood bars and restaurants. We would go and game a little bit more than usual. And so we saw record levels of sales, and then they came off, right? In 2023 was down, a handful of percentage points from 2022. But then here in 2024, we're up a handful of percentage points certainly during the spring peak season for video lottery sales. The one thing to note there was we saw a massive decline in sales during the ice storms a couple months ago, a couple weeks, where to the tune of about $8 million because we didn't really leave our houses for a while because of how bad the weather was outside. But outside of that, we're growing at a 6% pace, 5-6% pace on a year-over-year basis in recent weeks, which is very healthy gains in keeping with that underlying strengthen the economy. But you'll notice that we're below forecast because our office did build in a larger sales bump due to that kicker being paid out, right? A kicker is a shot of disposable income. It comes at one time, and we can see some impacts on discretionary forms of spending at that time, right? Like we go out to eat more, we could buy a new kayak or a bike or maybe, that sort of stuff. And so we were expecting a larger bump than we've seen in recent months that didn't really materialize. And so we're trying to think through why is that? Is it because the kicker's different? Is it because of the high inflation environment? Is there something else going on where, increase in income, disposable income doesn't result in increased discretionary spending? Is it this year's different? Is it just always that way? Is Oregon unique compared to national patterns. And one of the things that I was thinking about, we were thinking about, is, what is the impact of high inflation on household budgets, especially in things like going out to eat, which is the blue and gray lines here, which is meals and non-alcoholic beverages. That's away from home. The gray line is alcohol and purchase meals. So combined, that's when you go out to eat and you have a drink with dinner. These are quantity indexes at the US level from the Bureau of Economic Analysis. So it's volume of transactions, right? This is frequency, volumes of transactions. This is not taking into account the prices themselves, but just how frequently we're doing these things. You'll notice that despite those prices, right? Like I know probably when you guys go out to eat, I notice it with my family. You see the check and you're like, oh, wow, like that, the bill's a lot bigger than it used to be, but we still do it. We're still doing it at a record pace. We're grinding higher on going out to eat, as Americans. But, some of these other forms of discretionary spending and going out of the house sort of things like gambling and admission to spectator sports, have been more steady, right? We're back to going to sporting events. We're going to casinos and gaming and that sort of stuff, but it's not growing like going out to eat. So what is the possibility here that going out to eat, and in Oregon, given the location of video lottery terminals, like maybe we're going out to eat, but we're not also sitting and playing at the machine. Maybe we're just watching the sports on TV and then going home or something, right? Like, is there some impact here where we're seeing crowding out of some of these other activities on gaming specifically? And so with the help of the research team, the research at Lottery, we started digging into retailer by retailer data and looking at past years to this year. And this is a super convoluted chart, but you invited an economist today, so I'd say that's your choice to bring that into your discussions. Sorry. But the way you read this is we took all of the retailers in the state and we looked at it by region, we looked at it by retailer type and things like that. Here's a retailer type one, and just like the major categories of retailers, right? Your bars and your restaurants, your restaurants, your bars and your pubs, your limited menu retailers, and then other. Which is the bowling alleys and social clubs and all that sort of stuff. And so we looked at that coming off of that pandemic high, the reopening high in 2022. How much have sales changed since that all-time high we reached a couple of years ago? And so the 2-year change from 2022 to 2024 is on the horizontal axis left and right. So sales are down about 3% since that all-time high reached a couple of years ago. But if we focus just on the past year, 2023 to 2024, that's the vertical axis up and down. And so you'll see that overall, sales are up a couple percent in the past year. This is only through late April. The May sales have been even stronger. So again, we're running more like a 5% pace, May over May on a sales perspective. But for this particular look, it's up more like 2% statewide. What was surprising here, at least, if you want to think about the impact of going out to eat, crowding out other things you would do at the restaurant, right? We're going out to eat, but we're not also sitting at the terminals after we finish our meal or something like that, is restaurants, have relative strength here, right? There's some relative strength in the restaurants. So it doesn't look like at this sort of high level of analysis, not high level analysis, that there's not necessarily a lot of crowding out there. That's maybe not what's going on. The bars and the pubs, though, on the other hand, is a little bit more volatile. And so maybe we're not going out and socializing as much as we were a couple of years ago. And so maybe it's the lack of going out on the weekends and socializing more of an impact versus the going out to eat being an impact itself. And that could also be an inflationary story, right? The cost of drinks and snacks and that sort of stuff is higher. And so maybe that's an inflation impact there. And plus, we're just not socialized as much post-pandemic as we did pre-pandemic. And so that could also be a factor as well. The other thing I would note here would be the limited menu retailers, the strongest on a year-over-year basis. And so that's kind of one of those points where it's like, well, we didn't necessarily see the kicker impact that we thought we would see or that we had built into the forecast. But if limited menu retailers are up the most on a year-over-year basis, maybe there is a kicker impact in there somewhere that's harder to see at the top line. But when we focus on it, and maybe the more stable player base for limited menu retailers and things like that, maybe there is a kicker impact in there more than we thought just looking at top line sales. So sports betting would be, we've raised this forecast again. We've been raising it for the last few quarters. This time's a little bit different. At first, it was just that player base switching over to the DraftKings platform, the player base, the unique bets being made, that sort of stuff was coming in significantly above expectations. And it's been more profitable than expected. This forecast change from last quarter to this quarter is much more about the profitability. And we sat down, we talked with lottery, talking about our assumptions on the profitability, and it's coming from both ways that the game can be profitable. It's on the bets themselves, where the win or the margin of the bets is higher than had it been assumed in previous forecasts. Maybe that has to do with the odds that are being set a little bit, but it also probably has to do with the types of bets being made by the players. Where there a large share of the bets are parlays, where you have to hit like 2 or 3 or 4 or 5 legs of the bet to win the whole thing, and those are just harder to do and have higher profitability as a result. And so that's one thing I think that's impacting the profitability here for sure. The other one would be the actual transfer rate. So after lottery gets the margin, right, and pays out administrative costs for the program and that sort of stuff, how much is left over to transfer to the state for revenue purposes? And that the transfer rate has been noticeably higher than previously assumed as well. So revenues relative to administrative costs leading to higher transfer rates is also something that's making this forecast being raised here. And so that increase in profitability and changing our assumptions, we didn't move this profitability up all the way as far as we could. It's still relatively conservative. It's now not below what we've seen, but sort of at that low end of what we've seen in the past year or two on the margin and on the transfer rate. And that's really what's driving this most recent change, is that sales are up, but also the profitability of the game is higher than previously expected. And so again, that's driving some of the increased revenue at the statewide level. Now, the other thing I would note is we've been in this ramp up period, especially with the switch over on the platforms. And at some point that's going to slow down, right? At some point, the market's going to mature, the player base is going to sort of peak. There's only a certain share of the population is going to be interested in betting sports, right? And so at some point, the growth is going to slow considerably. We basically have one more year of really strong growth in there. I think it's in the magnitude of 17 or 18% for fiscal year 25 coming up here in a month. We have one more year of strong growth, a couple years of smaller gains, 3 or 4 or 5% year growth in 26 and 27. And then after that, it's very minimal. It's like 1 or 2% a year growth in 28 and beyond. And so it's just the timing here is going to matter tremendously, right? If the next year, fiscal 25 coming up, does not show another year of strong growth, then all these forecasts will be lowered again, right? Because that ramp up period. And so that timing of that is really unknown. And it's kind of only after the fact, in hindsight, it becomes clear. And so we think there's a little bit more ramp up to go before the markets mature, but that's an open question. And then, of course, if it lasted 2 more years instead of 1, then everything would be raised up as a result. And so that's something we're monitoring and trying to stay on top of. But it's a pure forecast at this point, and there's not a lot of you can't look at other states because all states kind of legalized at the same time, more or less, to know what that pattern of growth could look like. And so it's assumptions and ongoing discussions with other states and with lottery and the researchers and that sort of stuff to try and figure that out. So it's not without risk, but so far it's been good news from a state revenue perspective.
So we talk a lot about this ramp up. We talk about it frequently in the commission meetings too. And I take from this chart, we're sort of identifying that the ramp up period is likely done after 2025, maybe 2026, or am I misreading? And maybe that's also a question for the lottery, that what are we thinking? We've been talking about, we're still in that ramp up mode. We're still in that ramp up mode. When do we think we're not in that ramp? Are we just going to wait and see how it levels out? Anybody? Josh, anyone?
Yes. Oh, yes. Our forecast explicitly, I would call it 1.5 years of ramp up to go. That's how I would characterize that. But that's an open question, right?
Okay.
Is that measured by number of users, number of, I guess, bets made? What's the volume, I guess, or quantitative thing you're looking at in terms of measuring what the ramp up is and if you see a slowdown other than just the dollars.
Right. I think I would assume the leading indicator here will be number of active accounts or users, right? Versus ultimately the revenue is based upon the volume of bets, right? The dollar volume of bets. That's what matters from a revenue perspective. But you would think you'd see the player base slow down in terms of growth and that.
I think it depends on the future of sports, right? For example, if we got to a place where college
Right.
was authorized,
What we can offer.
we would see a different growth, right? Again,
Yeah.
and then we would
Yeah.
see it slowly over time stabilize. So
And I have to believe it's influenced somewhat by our demographics, the incoming 18 to 24-year-olds and who our participants are. So,
Yeah, absolutely. Absolutely, right. All of those things combined. Mike brings up a good point, right? There are other markets that we're not in right now that could potentially change those numbers. And yeah, as that population growth and those demographics change, we pay attention to all those player surveys every year to think through some of the implications there as well.
Josh, you said something also too, I think there's a percentage of the population that's maybe only interested in sports betting. I guess I'm a little wondering how we determine that. It seems like it's a hard thing to measure.
It is, and it's going to be based upon, I'd say there's two ways you can look at it. One would be surveys, right? Lottery does a player tracking survey every year where we get some data on that. I'm thinking through, like, we did something very similar last decade with the recreational marijuana forecast for the state, right? It was something that was newly legalized, and trying to think through a ramp up period and a usage. Like at some point there's a share of the population based upon demographics and size and all that sort of stuff that's interested in different sort of activities, right? And so trying to come up with reasonable estimates of that is really hard, right? And so you look at that, and then so that's one way, is looking at like the population level survey based information. The other one is you can also compare with other jurisdictions where it's like, here's their sales, on a population adjusted basis sort of thing, right? So if you're looking at California, they're 10 times our size. So it's like, if we're comparable, their revenue numbers or sales are going to be 10 times ours, roughly speaking, like that sort of stuff, right? Like you can look at other jurisdictions. I think the challenge here is that, with the way the sports betting has been implemented around the country, there's not a ton of variation, because it's all based upon the same legal decision at the same time, and then maybe a year or two different for states coming and going, and so that makes it a little harder to use that method. But ultimately, if you're thinking about what is the end size for this revenue in Oregon, comparing with some of those other jurisdictions is certainly a way to help think through that process.
Thank you.
So I think I have one more slide, just our big picture total. This is transfers, so this is not gross revenue for the lottery. This is transfers to the state for revenue purposes, which is ultimately where our office comes into play for the budget. And you can see a couple things to note, right? Is not only just where the money goes, where does lottery money go and help out the state for some of these program areas, but the trends, right? Where we saw coming out of the pandemic, we saw a huge jump up in revenues last biennium. As those reopening highs, and we saw those record sales on video lottery in particular, and the strong jackpot games as well. And then coming into this biennium, it's relatively stable, unchanged from one biennium to a next. And so that's good news for stability from a budget perspective, but that also makes it challenging operationally when you have increasing costs from labor and capital equipment from the agency's perspective and that sort of stuff, where the operational challenges are harder to deal with in a flat revenue environment. And then moving forward, you'll see there is growth in the forecast. It is not especially fast, right? It is 3 to 4% annualized growth over the next 10 years. Our personal income forecast is closer to 5%. for the state. And so we do have growth as in the outline. We'll have, again, we have a growing population, we're expecting at least. We have growing incomes, growing consumer spending, and we do have growing lottery sales, but not at an especially high rate. And so this is something to keep in mind, both from there's increased revenue, increased sales, but that might also have some impact on the operations and on state budgets is, if state costs are going up at a faster rate as well. And so it's just our high level, longer run look at it. And that's everything I had prepared for this morning. I'm always happy to chat.
Josh, go back to the last slide.
Please.
I had a question on what are your debt service assumptions? Is it, just over the next several biennia?
Yes, this debt service number you see here is just the debt service on bonds outstanding as of today, or I guess this was as of a few months ago. And so we're in the market now. We're going to issue them. I don't know if they're actually done yet. So those numbers will go up a little bit based upon the most recent debt issuances, and they'll change. And so you'll see they get a little smaller over time. That's because the way when the bonds are issued, they kind of layer them, like some today, some tomorrow, some in the future, like the payout period. And so
But
we're
you're-
not making assumptions about future debt issuance. That's something that the Debt Commission and Treasury and the legislature do every biennia. And as that changes, we incorporate the latest numbers into our work.
Thank you. On the other distributions, I just hadn't thought about that. What are you including in other distributions?
So I should note here, the first category, the dark blue that says education, that is the Education Stability Fund, the reserve account. That is the 18% there. The other distributions at the other end of the spectrum, that kind of darker gray, that is primarily education spending in the current biennium, right? It's primarily K-12 education. There's generally some other things in there. I think some Business Oregon funding as well. But it's primarily current education spending versus the one that's labeled education is the reserve fund itself.
And I'm just, because I hadn't really ever focused on that other category, because I did always believe that most of lottery dollars go in some form to education. So you've confirmed that.
Yes.
When we transfer, who makes the decisions about the other categories? The education is primarily constitutional and statutory. So who's making the decision about other distributions, or is that also statutory?
So the transfers, or the allocation of the transfers, like once the transfers are made from lottery to the Economic Development Fund, as it's officially called, you're right, there's constitutional dedications, there's statutory distributions, and then there's discretionary. And so parks and education and veterans are constitutional. Those percentages never change. They get the amount that's set in the Constitution. And then everything else is sort of at the discretion of the legislature. There are guidelines, right? 1% generally goes for problem gambling treatment and that sort of stuff, right? And 1% goes to county fairs, or maybe it's not quite 1%. Like there's some things that generally happen, but the legislature does have the ability every 2 years or during each biennia to adjust those numbers as they see fit. And so there's some wiggle room there based upon the legislative process. I guess the other one would be debt service, even though debt service, that is the highest priority for paying off our debt. And so that one is not set by the legislature in the sense that they do approve the overall debt issuance. So they do set that, but they don't go in and adjust it unless, there's changes in the bond market or issuances or things like that.
The education piece in the other distributions is not driven by statute. That's discretionary to the legislature.
The exact amount within that can be changed
Okay.
based upon the legislative process. But generally speaking, most bienniums is almost all education spending. But again, there's some other things in there that are much, much smaller. And that is governed by the legislature.
Okay. Thank you.
Yeah, so I appreciate if there's more questions, I'm always happy to chat. You can reach out at any time about anything Oregon economic revenue related. Um, Always here. So thanks.
Okay,
Thank you, Josh.
really appreciate that's great information. We asked our questions along the way, but I'll open anything else from anybody before we move on. Okay, thank you. Next on our agenda was just commissioner and communications, other business. If there's anything anyone wants to raise or discuss or note at this point. Okay, hearing nothing, what we'll do now is we'll move to an informational work session to discuss the fiscal year 25 strategy and budget. We have presentations from staff on various topics. Director Wells, I'll pass over you to get started, but I'm wondering if we take a break.
I was just gonna say that if you could take a 10-minute break and come back and we'll get started.
Pass it to you again then.
Sounds good.
Thank
All right,
you.
thank you.
Thanks.
Yeah, I mean, if they do that every year, they should just. throw it
Right.
in.
And you can see historically,
Yeah.
basically,
They do it
we're
every
probably not gonna do less than.
No.
So that seems very odd. I discovered a few years ago, a Me to call? Okay, I think we're gonna get started here. So have a seat. Thank you. I've never learned how to whistle, what can I say?
We'll get you one.
Get me a whistle. Okay, thank you. We will now move to an informational work session to discuss the fiscal year 25 strategy and budget. And I know that staff have presentations on various topics. And with that, I'm going to move to Director Wells to start the process for us.
Great. Thank you again for being here, commissioners. It's 2022 was actually the last time we had an opportunity to do a day-long session like this. So I'm excited. I think staff are excited to be able to share with you guys a look forward and a look backwards, some of the information that we have. Today, we're going to talk about the closeout of FY24, some improvements that we have made and are making internally, and what we anticipate for fiscal year 25. So try to cover all that. We're not going to be asking you for any decisions today, but June 28th, we will be asking for your approval and support of our FY25 strategic plan through its associated budget, which will support the projects and plans that we are proposing. Just a few logistical things before we get started today. Our staff, who are the subject matter experts in most of these areas, will be coming and going today as they do their presentation. So certainly we're open to answer questions all day if you have them, but when we have the subject matter experts here, that's the best time. So I can make sure and get you guys the answers you're looking for. We have some scheduled breaks throughout the day, but if you need to get up and move around, we're totally fine to do that. We're going to have a working lunch. So when lunch is delivered, we'll take a quick break and get back into presentations so we can try to stay on schedule for the rest of the day. Just as another reminder, the meeting is being live streamed all day. During breaks, the audio will be muted, but the video will remain on. So just keep that in mind. If we have any technical difficulties with the video stream, we do need to take a break and get that fixed. So we'll let you know if that happens. With that, we'll just do a quick review of what we're going to cover today. We always have problems with our clicker, so this will probably happen. We go forward one. Oh, you have it. Nice. I actually have it here too. So I will pull up my version while they're working on that version.
Sorry.
So we're going to start with strategy. So we'll talk about FY25 overarching strategy. The governor's office this year actually has required not only for state agencies to have a agency strategy, but also to have a DEI strategy as well as an IT strategy. So we're going to talk through both of those as well as our action plan. So what actions are we going to take to deliver on that strategy? We're going to cover some brand promise and tracking study insights. Have a section on responsible gambling, marketing updates. So what will you see from us in the next year, marketing wise? Video lottery ecosystem update, retailer partner management update. Cover the governor's expectations as you guys are probably to. There were a number of them that state agencies need to follow through on, and so we'll just have a quick update on where we stand on all of that. And then certainly we'll have some time throughout the day and at the end for any questions or further discussion. So I think we'll probably end earlier than what that agenda says, but we'll play by ear as we go. All right, so starting with the draft strategy, I've asked our Deputy Director and Strategy Officer, Ty Calandrero, to join us today and walk us through our strategies. So welcome, Ty.
Thank you. Good morning. Good morning, Director Wells and Chair Sathoff and members of the commission. I am happy to be here today to walk you through this part of the agenda. And I expect, as we have built on the momentum of the strategic planning process itself from last year, as well as our strategy of mission excellence, you're going to see in this walkthrough a build on that momentum and energy that we've built inside the organization. So I'm guessing, Jess, are you driving these slides for me? Perfect. Thank you so much. So here is our simple agenda for this walkthrough, and acknowledging that this was part of the pre-read materials. Please do feel free, as always, to jump in anytime with questions and comments. We will cover what was our approach for this year, talk about our strategy and the goals and the resources associated with implementing that, and our long-term roadmap, which was a commitment that we made last year, and also talk a little bit about how we'll measure plan performance. And the materials that you'll see in our strategic plan today are also tied directly, as Director Wells mentioned, to obviously governor's expectations around our IT and DEIB strategic plans, but also expectations around the strategic plan itself. And I'm happy to report that we have submitted our draft plan that we're going to walk through as well ahead of the deadline. Next slide, please. All right, so let's talk about our approach. At the very highest level, of course, right? What is our vision for the lottery? It is simply to align the lottery public service nexus. So we talked about last time about this new chapter that we are in and continue to be in, some of the work that we have done, who we serve, and who governs us. And we continue to align all of our thinking around the process itself for strategic planning and the plan itself around this vision. And then what naturally follows, next slide, please, is the job is the mission, right? It's who we are. Our values are in statute, very straightforward, the fish. And also you see here our commitment to equity, which ties to our DEIB strategic plan, in which, as Director Wells, of course, mentioned, you'll be hearing more about later today. Next slide, please. Then as we get through the thinking, vision, mission, values, commitment to equity, we also did an analysis of likely and impactful events that would be considered outside of lottery's control to survey the landscape and see what else we might need to solve for as we move forward with our long-term planning. So there are aspects here and annotations available to support these things that we identified, everything from political all the way to environmental. Next slide, please. And as a companion to that, we also did a SWOT analysis. Strengths and weaknesses, of course, are internal to the lottery, and opportunities and threats are, of course, external to the lottery. And the threats, of course, to perhaps our business and operating models do tie to the pestle that was shown previously. Next slide, please. And so where did this all lead? Thinking through that logic stack of our strategic planning process. It got us to thinking about some high-level scenarios that we considered and what would be within some of those strategy guardrails. So there are 3 scenarios here of things that could happen. And if you could just advance, thank you. As we got through the work that we just walked through, we realized that our target is somewhere between scenario 1 and scenario 2. Next slide, please. All right, so let's dig into the strategy, goals, resources, and roadmap. So our strategy house, so we talked a little bit about the why behind our strategy. This is the what, which is a continuation of the work we did last year around mission excellence. And then this is the next fiscal year goals and objectives that we have agency-wide set for the entire team. And so this is how we're going to deliver our strategy. And we'll talk a bit more later in the session today around the action plan that Director Wells mentioned. So those buckets should also feel familiar. Financial sustainability. We are now doing the continuation of our commitment from last year to really focus in on budget accuracy. So we're going to be measuring that by department. We will also work on a lottery product profitability action plan as part of these goals. In security and technology, we will deliver year 2 of the IT strategic plan that has been submitted to DAS. On the team side, we will continue to align the organization to the leadership pipeline. We're very excited about that work. We will also continue to build on the momentum of the procedure documentation for our organization, which is one of these goals that applies to every team member. And we'll also deliver year one of the DEIB strategic plan. And then last but not least, for lottery community, we will do the follow-on work that we also started last year, which is create the lottery community sentiment action plan. So these are our agency-wide team goals tied to mission excellence. Next slide, please. Thank you. And this should also feel familiar. Why mission excellence? It's about mastering the fundamentals, addressing the deferred maintenance and continuous improvement inside our organization. It's about enabling us to meet our state forecast expectations and prepare for the future, addressing deferred maintenance costs now and planning for operating cost increases, and of course, making sure that we are ready to respond to business demand that will continue to evolve. And so our approaches continue to evolve to follow that. Next slide, please. You can go ahead and advance. There you go. Perfect. Thank you. So what does mission excellence look like for our teams? So we are meeting teams where they are at, and we want them to continue to think about these questions and work together to get to a resounding yes. So there are some examples here within about figuring out current state around these parts of our strategy and working together to solve them, and some of the things that we hope to continue to improve on in fiscal year 25 and beyond around being able to measure those metrics around moving the needle and advancing our strategy delivery. Next slide, please. So here is a quick snapshot of what we just talked about in our strategy house around our aligned goals and objectives. And these are the actual SMART goal components around what exactly would we be looking for and what would the deadline be for that. So again, 4 categories, 7 SMART goals. And you can see how it maps to what aspects of our strategy around master the fundamentals, addressing deferred maintenance and continuous improvement. So we're excited that these goals really get after meaningful progress in these 3 areas. Next slide, please. So let's talk a little bit about the allocation of resources. And we didn't talk about this as much last year. So this is an improvement. And of course, this is, again, part of the ongoing alignment with the governor's expectations around elements that should be in agency strategic plans. And for us, it should sound familiar. Our agency efforts, are self-funded by net profit and administrative savings from a previous fiscal year that is either set aside in an investment fund to ensure we meet future transfer demand and bond obligations, or the funds may also be self-funded within a fiscal year through some reprioritization and cost savings achieved by our mission excellence efforts. And of course, these efforts overall seek to decrease operating expense baseline costs. And we plan on leveraging our current and planned FTE, our key strategic partners, our contracts, our capabilities and tools, all to deliver this plan. Next slide, please. Thank you. And so I won't go over these next few slides in great detail just because they drill into the specific resources. But generally, we refer to the departmental budgets that apply, the FTE that is assigned, and certain specific members of the team as serving as executive sponsors and business leaders, and talk a little bit about the financial, the human, and the technological allocated resources that we have that we will use, but also if we need to obtain within the current business plan, doing that as well. So it's about leveraging a lot of existing assets. So if I could trouble you just to go through these, take a second to pause, and you can keep on advancing. Awesome. Thank you so much. So we're very excited to also share this with you as well as we continue to expand in our longer term planning horizon and thinking around the strategy. And this is a summary in our roadmap of all the major milestones that will impact mission excellence. key things that we need to achieve and or potentially address in a timely manner as an organization in order to preserve our business and operating models and ultimately be able to serve that vision and the mission of who we are. So this is acknowledgement of key steps that we understand that we will need to take, and certainly will be part of commission conversations in the future as we get closer, especially when it comes to larger contracts and implementations of systems that are necessary for the lottery to continue to move forward. Next slide, please. All right, so let's talk a bit about measuring plan performance. So for us too, we hold ourselves accountable, and we will be increasing the level of communication that we will be providing in this next year. And this is also aligned with governor's expectations around monitoring performance of our strategic plan. So there will be, and we're in the process of building it. There will be 3 ways ultimately the public can view our strategic plan, and 2 ways they can receive quarterly updates. So we'll hold ourselves accountable to the SMART goals that we reviewed earlier. And that is, of course, those goals must be approved by you, our commission, every year. And the updates will start at the end of Q1 in fiscal year 25. The strategic plan was just presented, so that's one way to view it. Also, we will be coming back to that and asking for approval in our June meeting, as Director Wells mentioned. And these meetings, of course, are posted on YouTube on our commission site. And we also will create a second dedicated page to accountability that ties together. So quarterly updates at the commission site, and then at this future site around OregonLottery.org/strategy, the public may access a PDF of progress to date for our SMART goals in the current fiscal year. And then updates will be provided quarterly at commission meetings, and we are looking to bring back a more robust version of an end of year annual report. So that report will be posted within 4 weeks. The progress to date PDF 4 weeks of the previous quarter's end. And with that, I am open for questions.
Questions or comments from the commission? I have one regarding the financial sustainability, where you identify the lottery product profit reaction plan. I know we haven't gotten into details on that, but I want to make sure I understand the kind of top-down thinking on that. It sounds like what we're talking about is trying to take the existing infrastructure we have and drive more profitability within that. Not necessarily adding to it, but driving profitability with that, either through reduction in expenses, or I suspect looking at maybe where are we deriving profits from it, and trying to figure out if there's a better way to optimize our infrastructure. Did I get it right?
You're absolutely right. It's a combination of all those things. And for us, it will be the same level of effort we did for our VLT ecosystem, that same level of care, and really assessing the current state, that ecosystem. And yes, like you said, thinking about expense, being able to optimize the management of the portfolio that way as well, but also the offerings, staying within the guardrails of what it is we have today, and looking at making some improvements.
And I assume at some point, either you have or you will be looking at how do we connect that strategy up with what our, I guess I would say, our current obligations are. And I know that I focus a lot on the debt, but those are some significant current obligations, as well as what we provide to education and so on. So somehow that strategic plan has to marry up with the financial expectations of us for transfers, right?
Absolutely.
I just want to make sure I'm with you. Thank you.
You're welcome.
All right, thank you, Ty. Thais, I'm going to pass the clicker off to you here. And Thais is going to cover the DEIB strategic plan for us.
Good morning, Chair Sathoff, Commissioners, Director Well. For the record, my name is Thais Rodick. I am the Senior Marketing Program Manager and presenting here in my hat as DEIB Committee Chair. The plan that you're going to see was created in conjunction with me, our co-chair, Anthony Camacho, and then our Senior Manager for DEIB, Stoanne Francis. So as Director Wells mentioned, this is the first time we've done a strategic plan. And we established our mission, vision, and objectives aligned with our overall mission and vision. So our mission is at Oregon State Lottery, we're committed to fostering an inclusive and anti-racist environment for our employees, retailers, players, and community. We believe in the inherent value and dignity of every individual, including all existing diverse dimensions one may possess. Our vision is that the lottery will create a workplace and community where every employee, retailer, player, and community member feels valued, respected, and empowered to help us maximize profits for the state of Oregon, commensurate with the public good. Our objectives are to establish a framework of triple lenses, and I'll get to the detail of what that means. Organizational self-awareness to foster comprehensive growth and adaptability, instill a feeling of workplace unity to nurture a diverse and connected team environment, and develop and amplify accessible educational initiatives to empower lottery employees. As I forgot to say in the beginning, if you have questions along the way, please stop and ask me. So what did we do for year one? When we were looking at our plan, we looked at data, and what we realized is that we didn't have a lot of data. We've not done an assessment with the employees in terms of where folks are in terms of diversity, equity, inclusion, and belonging. And so we used what we had, which was to look at a lot of our internal data. So reviews and HR reports, hiring, promotions, all the data that we would typically have as an organization, and really establish a baseline. And what we found is that, again, we didn't have a lot of data, but we are committed to becoming a data-driven approach so that we can quantify our progress and hold ourselves accountable to our goals. It made sense for us to really divide this work because it is insurmountable at times. And so we took it in chunks in terms of first year is analyzing and improving lottery as an employer. So that's the triple lenses. And then from then we grow in our concentric circle. So then we go lottery as an employer, internal first, year two, lottery as a business partner, and our impact we have with our direct folks, retailers and players. And then beyond that in year three, lottery as a community. So how do we serve Oregonians in general? And so that's the approach to tackle the work on a concerted effort. So for year one, is lottery as employer. Find areas and opportunities for improvement and research best practices to address them. A lot of it is, again, that initial data creation and analysis and a dashboard is running a pay equity data, which is currently underway with HR, expanding our learning programs and exploring process improvements, which again goes into the operational excellence goals for the agency as a whole. So year one, as an employer, we are expanding our learning programs quarterly and monthly, and that's already in place. So what that means is that monthly, there's a learning DEIB opportunity tied with each month theme. So for instance, for May, it was Asian American Heritage, Asian American Pacific Islander Heritage Month. And so we had a specific topic that we talked about and had invited employees to discuss, and it was the Japanese American experience in Oregon, in Eastern Oregon, in Nissa. So again, whenever possible, we're trying to make them culturally relevant to Oregon and contextual. And they're optional, but they are reflected in the reflecting in planning quarterly reviews that we have as employee. There's a question asked about what did you learn or found about DEIB in the past quarter. So they are being analyzed and measured. Quarterly, we are doing lectures that's called This is DEIB. So the practical applications of diversity, equity, inclusion, and belonging in terms of business sense. Our first one was on expanding language line, which is the services that we use to communicate with our retailers and players in various languages and accessibility platforms. And then the last one, this last quarter, was on our inclusive practices in marketing and how specifically we're addressing the Latinx community in our creation. And you might see that later on in the marketing presentation. Yes,
Sorry.
please.
On the expanding learning programs on the prior slide, and then here you have it too as expanding learning programs. I'm trying to get an idea of what that would entail. Is it specifically to DEIB or does it include things like people's growth in their job? Does it look at whether or not we want employees to be advanced in their careers? Help me understand more
Yes.
about the scope of the learning program.
Thank you, Sheriff Thoff. In this context is about diversity, equity, inclusion, and belonging. So all the different diversity dimensions.
Thank you.
Yep, absolutely. The next one was disability awareness assessment and video. So we want to make sure that folks understand what is disability, what are accommodations, and how to request them. So we are launching a video for folks to understand that and making that clear for folks to request accommodations if needed. We know that between 4% and 7% of folks report disability in the workplace, and we are a little bit under that percentage at Lottery as a whole. We are also looking at analyzing HR complaint reporting process. So again, we've had an unusual low number of reports. And so we want to really try to address that if we have a great organization, or is it we have psychological safety that we can address and increase awareness and conversations around that. So part of it, next one is improving the exit interview assessment. Again, we have some data we could definitely improve and get to the more of the whys and the reasons behind. We have a policy review through equity lenses. So that is goal for next year, is to review all of our policies, make sure they're compliant and up to date and relevant. And we will vet them also through an equity lenses. We are reviewing our Gallup scores. As you know, we're in year 2 of them. They've been great. There are 2 questions that specifically measure diversity, equity, inclusion, and belonging. Question 7, which is at work, my opinion matters or my opinion counts. And then question 13, which is at work, I'm treated with respect. And so we're looking at those and understanding, are there differences within demographics? Are there differences within age? And what can we do to address those discrepancies? We are very fortunate that we were able to partner with PSU and Partners in Diversity, and they're doing a DEI impact survey in the region in Oregon and Southwest Washington to establish baselines and benchmarks. And we will be included in that. And so we will be able to see the aggregate results. And again, and it's optional, participation is optional for employees, but we will have a baseline of where we are and where we could see improvements. We had an audit findings in 2018 about procurement, and it was at the same time that the state of Oregon was doing a disparity study. That disparity study was published last November. And so we're working ahead to see what can we do at Lottery in preparation for the recommendations that are coming from the Department of Administrative Service. And yes, Sheriff Thoff.
Sorry.
That's okay.
Somebody maybe can remind me, the procurement audit, is that mostly about looking at expanding our contractors in terms of minority and women businesses?
Yes.
Were there other things in the high level that you could maybe remind me of?
Yeah, it analyzed the amount of businesses that we do with minority owned and COBID certified, which is the Office of Certification for Business Oregon that certifies businesses in those categories. And Lottery at the time was doing fairly well, mainly due to one vendor who was women-owned, but we have since not done business with that vendor, and we have definitely an opportunity to address, and that will be in year 2. But we're waiting on more guidelines from Department of Administrative Service. What we have done that is a huge improvement is that Lottery can direct, award, or limit competition for procurements of 50,000, of up to 50,000, where currently DAS is up to 15,000. So we have a bit more latitude in that sense.
We've been working on this since the audit, but it's still.
Correct.
Okay.
Yep. And then last but not least is the community partner piece, because that's going to take time. And so we really have to start in year 1, and it's outline of scope of work and start engagement. And what that may look like is, it could be including organizations to help us with our monthly talks or DIB learning that I mentioned. It could be with internship opportunities, potential scholarships, translation assistance, and just overall expertise on the current state of various communities in Oregon. So for year 2, we're finding the gaps. Year 2, we're filling the gaps. So we're expanding again and going to that next scope of players and retailers. And we'll address specifically procurement, pay equity, policy and procedures, and our customer experience in terms of language, ID, and access. So for that one, for the pay equity assessment, this is more, I mentioned it in year one, this is more of a vertical analysis. So is analyzing adjusted and unadjusted pay gaps in terms of how much does a majority person, so if in this organization at lottery, if it's a white male, how much does that person make in relation to a minority, women or other underrepresented groups, and understanding the percentage so that we can close the gap for opportunities, not necessarily the gap in terms of knowledge, skills, and abilities, but it's the upward mobility portion of it. As you will see on the business portion, we are proposing to increase by 5% overall dollars awarded to underrepresented and community-owned businesses, and that's addressing that audit findings. For business, in terms of our retail partner demographics, currently, we don't know their demographic information, and we put a question into our retailer survey in this year asking if they were willing to share that with us, and the majority of them were in favor of sharing that with us. That will help us understand, again, what are the gaps and what are the opportunities in terms of our retailer base, and how can we be more inclusive and diverse. As an employer and as a business is to launch employee resource groups. As I mentioned, even with the Gallup analysis, there are some groups that we could ask for more input and understand the whys they scored the way that they did, but they are not self-identified, right? That information is not divulged. And so how do we get to folks, and how do we improve the experience in a way that's more organic and foster conversations and participation and belonging? And then review our customer experience opportunities and make recommendations. There are a variety of them. In our payment centers, we're asking folks to drive up sometimes an hour and a half from where they live. How can we make some opportunities to make that more inclusive, more accessible, more equitable across the state? Yes, sure, Steph.
I feel like we have done some internal equity compensation moves.
Absolutely.
So we're capitalizing on that and just moving into, I really like this, looking at closing the gap.
Correct. Yeah, the vertical analysis piece. Yeah.
But I'm surprised it's not a criticism. I just never thought about, we didn't have that information. We haven't looked at that.
Correct. It's a huge amount of work to be done. We gotta start somewhere.
Yeah.
And then year 3, which is expanding the reach for our communities, and it is reaching out. So issue a report on year 2. So how did we do in working with those cultural community organizations, and what could we do better, and how can we expand in year 3? We would attend multicultural community meetings and events, and we're doing some of it right now. We work with the Oregon Health Authority. They have a multicultural advisory committee, and we participate in that, but how can we expand that reach and work even more across different communities in Oregon? Establish a benchmark for community sentiment, so do focus groups and listening sessions and town halls to see how are we perceived in the various communities. And then last but not least, the same benchmarks with our 9 federally recognized tribes. Any questions?
You count, process. Not just they might not qualify, but how are they, how are they spending? Then it shows them, a different, triple kind of how we're counting things as well. I started the supplier diversity program at OHC, and we're doing that with our contractors and their subcontractors, right? And so, it's tough to find people that make ELT. It's tough to find people who do the technology, because sometimes economies of scale. So I guess I'm just wondering if you guys do thinking about tracking that.
Go for it.
Okay, so we have a scoring process for it, and where we ask their efforts in terms of diversity, equity, inclusion, and belonging, and at times the composition of their workforce. but it's been hit or miss on how we evaluate it. So it doesn't count as a +5 or so. It's definitely something that could be addressed. And in that sense, when that that audit findings, it did quantify the opportunities available. So it's about 20 million at that time that could be potentially awarded to businesses that are minority owned and diverse. And so the 100 millions or so that are going to the VLT, we can't change that from the nature of our business, but we definitely could do better in terms of diversifying our supplier base.
That actually seems to have a larger community impact if we are pushing on our contractors to also diversify. Things like that. Positive thing. Anybody else, questions or comments?
Thank you for your time.
Yeah, before we move on, I would just like to, add to that, lottery's been, as you know, have been focused on DEIB for a long time, but I think that what I'm excited about and the difference of this is Thais and her team have put together a really good strategy with measurable goals that we can actually track our progress, see that we're improving. And that's what this strategic plan, we really haven't had this built out before. And so super excited about where we're going and that it's based on measurable data and building measurable data. So.
And something that you just said triggered. Do we have do we need additional technology to do this data analysis, or do you think we have what we need?
I think we have what we need, and then we identified budget needs for year 2 and 3, so we can source appropriately.
All right, I'm gonna invite Christina up, and she's gonna review the IT strategic plan for you.
Good morning, Commissioners. I'm Christina Damshin-Spina. I am the Senior Manager of IT Governance. And happy to be presenting the IT Strategic Plan to you, which has been submitted to DAS. It all begins with our mission. Much like the Enterprise Strategic Plan, we're aligned to refocus on our mission, our values, and IT is absolutely aligned with the enterprise strategy when it comes to mission excellence. In this next phase, mastering the fundamentals is going back to focusing on our core competencies. We're working on addressing deferred maintenance to have maximum uptime for systems and creating continuous improvement so we can continuously adapt to changing needs of the business and the technological landscape. And because IT is an enabler of the business, we're extremely focused on making sure we enable each of these technology initiatives across the enterprise. Now, in order to do that, IT must focus on developing these key capabilities. First is working on strong execution, and that will take modernizing our governance. It means creating new systems that can monitor how our portfolio is performing, making sure we have the right risk controls in our designs, and just monitoring our processes continuously for opportunities for optimization and improvement.
Pause here for me.
Mhm.
And speaking from experience, not a great experience, by the way. If you impose technology on any of these business systems for us, one of the things that we've learned in my company is that you have to have a strong feedback loop so that it's wonderful to give your employees or in our entire community these tools, but if using them or the people, the users are one having difficulty, it's too complicated to use, you kind of lost all of your investment. So what are we doing to figure out when we apply new technology, it's working? I sort of recall we had some issues initially in the sports betting, and we worked on it and tried to fix that. I'm just curious, is that part of, I look at that as strong execution. Is it part of that? Is it operational excellence? Where does it fit in that we go back and say, we promised people it would do this, it's actually doing this, we got some feedback that there are problems with it and we're fixing those.
That's a wonderful question. I think there's many opportunities for us to get the right information to conduct those feedback loops. Part of it, you brought up with sports betting. We need to make sure our business partners have the right data about usability. So that's where the modernized foundational capabilities comes in, ensuring that we're collecting the right data across systems, getting it in a easy to use place for our analytics teams to create the right reporting and insights. Then there are surveys for our staff on how they're using our tools. That's where the operational excellence comes in and our IT service management, creating surveys about how people's experiences were in both using the tools and the services we're providing to them. I think within governance, we're really trying to make sure we have continual feedback loops around the processes of implementing our work and having good systems for looking at things post-relief and reviewing things such as adoption. And if people are truly using those or if there's an opportunity for simplification.
Thank you.
I already touched on a little bit of that operational excellence. We do have some great new initiatives around IT financial management and looking at the overall costs of our systems and opportunities to conserve. And then all that needs to be bolstered with security. There are lots of changing technologies and changing technological risks. And so these programs we've outlined here should allow us to adapt and strengthen our overall security posture. And then finally, those foundational capabilities, as I mentioned, data is very important to this, as well as our development on the platforms that we're bringing on to modernize our workforce. This is how this lays out over time. So to first start with the operational excellence and cost efficiency, that technology spend optimization. We brought this up before as it related to the enterprise strategic plan. We are moving from this stage of rapid growth and modernization to one that we're going, let's simplify our technology portfolio. There's going to be opportunities for cost optimization and overall simplification of how our systems are working together. And that's where the data management program will come in as well. We want to create better reporting cross-functionally between our teams and our systems. And that will help us do that along with the integration management. That will reduce manual work and create more efficiencies in how we're doing work. And then finally, the cloud migration. So that's the final move from our legacy systems into the cloud. Shifting over to employee experience, because our systems, it's not just about processes and efficiencies there. We really want to enable our staff to do their best work. And as you'll see in the enterprise strategic plan, things like processes need to be communicated and accessible across our organization, and M365 or SharePoint is what will help them do that. In addition to making sure that they can communicate effectively, we want to ensure their tools are effective and they have maximum uptime, especially considering we're in a remote work setting for many of our employees. So that program of maturing our service management will not only ensure our uptime, but good routine maintenance of our systems. And then finally, for compliance, security, and risk management, we have our strengthening of the cybersecurity program to improve our security position, and enterprise architecture, which really is an advisory to risk management, understanding our systems and identifying opportunities, cost optimization, that can be baked into our designs as new opportunities arise. And that's it. Do you have any questions?
Questions or comments from the commission?
Thank you for your time.
Grab me the clicker. All right, so we've kind of seen the strategies, so really we're just gonna go through a little bit more tactical as to how are we gonna deliver on the things that we've talked about. You know, one of the things that we have thought through a lot and have talked about with you guys a lot, and we've seen in budgets is as we have created budgets and strategies in the past, we've gone into them with a lot of hopes and dreams of getting things accomplished, and we put those things in our budgets, and oftentimes those are the variances that you see is we're not able to accomplish as much as we have kicked off in the beginning of the year. So, you know, one of the things that we've worked through, and we'll talk about here in a minute, is how can we actually deliver on this mission excellence while doing it fiscally responsible and also ensure that we're accomplishing what we're telling you that we're going to do and what we're asking staff to accomplish so that, you know, we have some wins at the end of the year. So I'm going to talk a little bit more tactical about how we're going to do that, what we're going to try to prioritize next year. And then I'm going to ask the F&A team to join us, talk about some FY24 improvements, like what have you seen and how we're improving, some of our budgeting, some of our documentation, and then what that looks like for FY25. So you've seen the top of this already, right? So again, just reviewing that, you know, this is kind of that strategy of mission excellence. These are the goals and objectives that we've set aside, but how are we going to deliver on these? And for us, we broke down those agency goals and objectives kind of into 3 tactical buckets. So how do we manage our game portfolio? I think it's something that frankly, we lost sight of a little bit as we've gone through modernization over the last number of years. So it's how do we get back to managing that portfolio and focusing on that mission of revenue? And then how do we optimize cost and reduce risk at the same time? And then how do we improve customer experience? We feel like these 3 things are really tied together and will deliver on those agency goals and objectives. So I'm gonna kind of dig into these in a little more detail. Some of them I'm very, very good and deep in knowledge on, and some I am not. So, but we'll explain each of them individually, so you guys just kind of understand what we're trying to prioritize. We spent a lot of time looking at resources, and you'll see these in our budget for this year. The items on this slide are what will be rolled up into our budget. There will be some other things, but these are the primary things that we as an executive team feel like we need to prioritize and accomplish next year. So when it comes to that managing game portfolio, we have some Mega Million game changes that are out of our control. Those are coming to us sometime this year that will take staff time and take a little bit of effort for us to do. But as you know, that's a national game. It's set by Muscle that oversees that. And so those changes are things that we will need to implement and have staff resources dedicated to. We've really looked at the game portfolio. Lucky Lines is one of our games. It's actually our lowest performing game. And so we're really looking to see what can we do to replace that game and get back to generating the revenue that the game used to generate for us. It has actually been 14 years outside of sports since we have launched something new for our customers. So we are super excited about this. We believe that this game, Cash Pop, will be a great replacement game for that. Enabling Fort Knox. This is something that's been in this year's budget that we were actually purchased, and this is just a video lottery terminal add-on that will be deployed in the next fiscal year. But it's something that allows progressives. We have some progressive games in the market right now, but this allows us to kind of stitch progressive games together so that we not only have progressives only on a single terminal, but all of our terminals could then have the options for progressives, or you can actually join games together. So you play one game that you like and somebody else is playing a different game, you're actually both contributing to the same progressive pot. So gives us some more options in the field for that progressive jackpot type approach. Powerball has a number of add-ons. If you go to other states and buy a Powerball, there's some add-ons, one of which is called Double Play. It's a pretty easy effort on our part to turn that on. Most states have Power Play, we don't, and so we see that as something that we should do. It's something that Muscle is really pushing, and it's just something that we have not yet accomplished. So we have that in the Rolodex for next year.
So this is just for this fiscal year, managing the 4 items there. Others will come in the next year.
Correct.
Okay.
Yeah, these are
These
what
are
we
mostly traditional.
correct. These are what we think that we can actually accomplish with staff and budget in this year. And again, that's really what we tried to focus on is, you know, in that long-term roadmap that Ty showed you, we definitely have ideas for future years, but this is for FY 25, what we are going to prioritize. And, you know, knock on wood, the expectation is at the end of FY 25, we will have delivered on these and we'll be able to report that we've successfully accomplished these.
Well, I think a revamp on the traditional, like the replacing lucky lines is long overdue in terms of looking at that, the traditional portfolio and thinking through how do we optimize what we can do there. So I'm really happy you guys are looking at that.
Thank you. Moving into the improved CX category. You know, digital claims and payments. As you guys know, we have 2 payment centers, Salem and Wilsonville. And for high tier winners, they have to drive here. So if you're a high tier winner in Baker City or Ontario or Bend or Southern Oregon, you have to make a drive. And we really believe this from a customer experience that we're behind, that we need to get to a place where we can offer some type of digital claims and payment system.
Is a high tier again 50 grand?
No, so that would be over $1,200.
Oh, okay,
So,
just, thank you.
so there's a lot of travel. Now you can send it in the mail. It's slow and a lot of people don't want to do that, right? They want to drive here. So this is going to take, this is effort. This is discovery effort that we really need to get a plan together on how we're going to offer this in the future.
Well, it seems like, you know, such a, from a customer standpoint, right? And people enjoy coming in for a reason, and we bring that experience to them.
Right.
Right, versus having it be online and less personal, right? We have fleets and we have staff, right? I mean,
Yeah, or something around where they.
people have, you know, you present to them where they're at, right? You don't have to drive here, you can drive.
Oh, I see what you mean. Yeah.
Right, so thinking about it from a customer standpoint, right, we're really, you know, we need to push this game and that game, so customer experience, right, they're going different, they're putting their disposable income, right, which is machine, so how do we think about them, right?
Mhm.
Think about their environment, what's our brain, right?
Yeah, I can totally see that for some of those really large jackpots, right? But
50,000 plus, it makes sense.
But we have a
right?
lot of people in that $1,500 to $2,500 wins that are currently, a lot of them just get mailed and we deal with them that way, but coming up with something like this, and as you guys know, and we've talked a lot about, everybody likes their digital options, right? They like to be able to do it from their phone, and so how can we keep up with that technology and the demographic that really wants to be there, so. Digital
Mike,
coup.
Would
Yeah, go ahead.
would the retailers be involved in these digital payouts? Is that going to create question marks for them in terms of, I don't have $50,000 in my cash register to pay this guy? What am I
Yeah,
going to
so
do?
this would be more like you would have the money deposited directly as a winner to your bank account.
That's fine.
And from a retail standpoint, I thank you for bringing that up. You know, most of our retail establishments now have to keep a large amount of cash on hand to pay out some of these transactions. And so also reducing the amount of cash they have to have on hand because this is an option to our customers. We also see as a win, and I think our retailers would also appreciate. So,
Is that, are we taking into consideration maybe customers that don't have a bank account or?
yeah, that's definitely part of that discovery effort is how do we address all those situations as best as possible?
Yeah.
So,
Yeah, I was thinking Venmo or something.
Yeah. There's a lot of nuance to all of this, right? Yeah, there's a lot of companies that don't want to be involved with gambling transactions, and so, and that's why we have it as discovery, because there is a lot to learn and a lot for us to really try to unpack and figure out what is the best strategy for Oregon Lottery to move forward. Moving on, digital couponing, we offer to our players now for a variety of circumstances, some type of free play. That's still done on paper. We still hand out paper free play tickets. We're trying to make this more of a digital experience. It allows us to track it better. Who's getting it? Why are they getting it? It also makes it easier for us to get it to those people instead of either physically going or trying to put it in the mail. So this is work that's been ongoing. We just need to complete it and get to a product. So trying to get that done in the next year as well. RPM Phase 4, we're gonna have a presentation later this afternoon. You'll get to know a lot more about this, but the Phase 4 in general, Phase 4 is our retail contracts portion of this project. That is why we delayed our contracts, and we gave a contract extension for 2 years. It was so we could complete this portion of the project. And so, again, we'll hear a lot more this afternoon about kind of what the status of that is and where we're going. But this is something that has to be a priority because it needs to be completed so we can offer our new contract in 2 years. And so this is something we're tracking really closely. So when it comes to optimizing cost and reducing risk, right? This is, again, as you heard from Christina just a minute ago, when it comes to IT and just overall strategy on reducing our costs. As we have modernized and as time has gone on, we have a lot of applications and we have a lot of software and we have a lot of things going on here. And we need to figure it all out and we need to reduce and we need to figure out what are our core systems, what are we going to continue to use, and let's get rid of some things. As you guys all know, the more you have, the more risk you have when it comes to software and hardware technologies. So for us, this is kind of twofold. We see application rationalization as a project where we're going to do a better job inventorying what we have, figure out what is it that we actually are using and need, and get rid of the rest. It'll reduce cost, it'll reduce our security risk, and it'll make it easier for our IT department and the rest of staff to actually manage that across the organization.
You currently manage your IT mostly internally or outsourced with contractors?
We have most of it internally. We have a lot of contractors that are helping with a lot of that IT work, but it's mostly internal.
One thing that we've been looking at is whether or not it's actually more cost effective to bring people in rather than use the contractors because the contractor base pay is going up so quickly.
Yeah.
We haven't thought about that.
It is. Yeah. I mean, as you guys know, all of those expenses are going up. And so it's, you know, it's pulling little strings at all of this. There's no giant win in any of it. It's looking at each one of these aspects to see how can we reduce our internal costs and be more efficient and more effective, right? And so as we've shared throughout the year and we've done some of these things, we're starting to see some benefit. We're actually starting to notice it. It's just continuing to make these small changes. Some of these other things are just, you know, Lease Query is some new software that's going to help us in tracking our leased assets. So it's real estate property, equipment, vehicles that we're leasing. So just helping from an F&A standpoint, track those a little bit better. Yeah. Yeah, exactly. Software. Yeah, exactly. Discovery for Evo, IGT Evo. So Intelligen is the system that we currently have in place that controls and manages our video lottery network, our system. It's the gaming system that manages our video lotteries. It's end of life, as everything always seems to be. It's end of life. Evo is the next generation that IGT is providing. So it's for us to do some discovery. We need to determine if it's time to switch, what is the best course of action for us. There's a lot of wins in it. all of these things are expensive when we transition from one system to another. They're big work efforts. So it's really spending a good portion of this year trying to figure out what is the path forward for us. So you're going to be hearing a lot about Evo, I think, over the next many years, probably, because this is what's coming for us. Biennial security review. Believe it or not, it is actually the time to do a biennial security review again. Again, we do those biannually. Every 2 years, we're required by statute to do a security review, physical and technical. We had some findings the last time we did it. We were pretty aggressive in our review. And so the team has been working diligently over the last year and a half to remediate all of those findings, doing a great job. We have the majority of the big items cleared up and cleaned up. You'll be seeing soon, we will be asking to use the same company to come in and do another review. We think that's great to use the same team that saw us once, recommended a bunch of work. Now have we actually done a good job in plugging those holes? And so not only are we going to finish what outstanding work is there, but we're also going to have to go through another security review in FY25. So I'm excited for both of those things to move forward. Back office security upgrades. So back office is what we call the system that kind of manages our lottery app and the systems there. We have some security work that we need to do on that as we collect more data through the app. And Second Chance is through our app. So they're giving people another opportunity to win. There's some security upgrades that need to get accomplished for us to continue to offer those systems. And so those have been prioritized for next year as well. Building security updates. This started last year. We need to finish it. It's, as a reminder, this is the kind of the physical security of the building. So again, we were end of life on cameras and door locks and prox cards, and we were using chains and padlocks at times to lock some doors around here. So we are well into this project. As you look around, we've got new cameras everywhere, but we just need to get that body of work finished. And this includes all of our buildings outside. So it's HQ, it's our Wilsonville Center, and all of our depots across the state. So it's a big body of work, but definitely something that needed to get accomplished and gives us better control in the end of those systems. They were very bifurcated. We had multiple systems. This gets all of our alarms controlled by the same company. It gets all of our cameras to one system so we can monitor correctly.
You, just as a remind me, you also have security personnel.
Correct.
At these facilities. Are they all employees or is that outsourced?
So our security personnel are only at headquarters in Wilsonville, so our 2 places, and those are all internal. And then outsource would be to state police, who does some of our investigations, as well as vendor backgrounds and retail backgrounds.
But they're not placed at our facilities in case a problem happened at a facility. We have just internal employees there.
OSP is placed in Wilsonville at the 2 payment centers, Salem and Wilsonville.
Okay.
And then that's also where our non-sworn lottery security staff also work.
And obviously OSP is armed, our internal people armed.
They are not.
How many OSP do we have now that's assigned to lottery?
I believe it's 21 by contract. Yeah, so I think it's 21. So that includes a lieutenant, a sergeant, and the rest are detectives. And then one of those are specifically assigned to manage vendor backgrounds.
How's our turnover with those folks? Are they moving in and out, or we get good experience with staying around for a while?
They stay around. Yeah, it's a good experience. Good experience. So I think they enjoy working here. They get to work typically 8 to 5 Monday through Friday, unlike being out on the road. So I think it's a pretty good job for them. All right, moving down, E-Fleet is the next one listed on here. So this, again, as we talk about legacy systems, we're currently operating a fleet management system on a very old platform. And this is just updating our fleet management software so we can do a better job, be a little more accurate, have some backups to our fleet management system, all the stuff that we need to do to sort of modernize what we're doing for fleet. Lumen, we've spent a lot of time talking about. Again, this is the gaming network. This is also tied to our contract. This needs to be completed within the next 2 fiscal years so that we can offer our new contracts and get the pricing correct for our retailers. So this one is, it's a little bit out of our control. We have a little bit of internal work of managing this project. But it's something we need to keep front and center as we move forward, that this is obviously a core to this business, is our video lottery system, and this network that Lumen is trying to rebuild for us has to stay front and center as our priorities go forward. Similar and along the same lines as what we call iLinks. And this is kind of the hardware that goes along with the video system. So as we make video lottery improvements and the terminals change, this is kind of that in-between piece that connects the network and the terminals. So this is the hardware that needs to also be updated. This is hands-on work. This is stuff that staff have to go out and actually do. This is equipment that has to be placed at every retailer across the state. And so it's a partnership between us and IGT, our gaming partner, to get all of this equipment in place and in the field and updated. So again, that's in our priority list. EA Foundation tool. We've talked a lot about modernization. We've done this for years now. As Christina talked about, things also have gotten more complicated in architecture and how this all works together. And so this is just some tools to help IT in that foundational architectural work here, so that we know, again, where is everything? How's it all working together? And just ensure that we can stay on top of that a little bit better. Similarly, this phase 4 software asset management, it brings improvements to tracking software applications across the organization. Again, ensuring we know what we have, we're managing it correctly, and making things more secure. That's kind of the point of what we're trying to do with all of this. Again, risk-based IT governance. It's that IT governance foundation that's so critical to making all the things we just talked about and Christina's talked about actually working. So just staying focused on the governance around all of this. And then lastly, Case IQ. This is a security case management software system within our security department, which does all of our background work with retailers and employees and vendors and all of our investigations. This has been done through kind of a cobbled together system of many systems. And this is trying to update and repair that and actually get a security case management system together that allows us to actually get some good data and track our problems and be a little bit more predictive and prescriptive in what we're doing. So these are the things that we believe we can actually accomplish, that we have the staff to do, the time to do, that we see as their priorities, things that need to get accomplished to take this organization to the next level. So it's a much shorter list than we have provided you guys, believe it or not. It still looks like a lot. It feels like a lot, but it's probably half to a quarter of what we have suggested we could accomplish in prior years. So I think as an executive team, we feel like this can actually be done. We can tell you at the end of FY25 that we've accomplished those that are one-year projects on this list that have actually been accomplished.
So you started with something there. I just want to know, can you confirm it? You started with one of the things you're trying to do is also look at all the systems you have and decide, any of these things we don't need,
Correct.
get rid of that. I'm assuming this list has already made that cut. These are things we know we need. So
Absolutely.
there's a lot more out there that we need to look at and possibly get rid of.
Right, right. And you will see some of that is actually on this list. So we have a backup list, and I'm not going to go step by step through this and bore you with it, but you know, there's always a concern when you have an organization this size that I didn't see my project on that list, therefore what am I going to do the rest of the year? Well, there's plenty to do, right? And as if there's time and if there are things available, we kind of see this as the backup list to the list. These are the things that we can also accomplish. And you can see on here, we have some things that we know need to be decommissioned. That in itself is a process to do it the right way because of public records rules, because of the way we have to keep things and manage things. Decommissioning doesn't just mean you get to hit delete. Unfortunately, it's more complicated than that. And so that is work stream of its own to just turn something off. And so we have those on here. Hope to get to all of these. Setting them in the background is okay for a period of time if we need to focus on other things. But eventually this work needs to happen. And as we do, the process of managing and looking at the systems that we have and what can we get rid of, right? That list of decommission is going to obviously get larger, and that work stream will continue. But, you know, I think that we can get to a place where we have, and the goal would be that we have 3 or 4 core systems that we know that we operate off of, and we have a few other software support systems, and really just shrink the footprint of things that we're trying to manage from a security standpoint and manage from a technology standpoint. I'll also just mention we have a few things here for discovery that we're going to look at that really tie to revenue. We're going to be looking at sports bet pool play. It's just a different way within sports betting to make wagers. It's something we've looked at. We need to do a little bit more digging on. It's probably the next thing that we could see as a potential progression in our sports portfolio. It's something that a lot of our players have been used to in other systems, other wagering programs. And so it's one of those things they ask for often. And so we need to do some more digging and work with DOJ to do some more discovery efforts on this. In-lane is buying a little more simplistic. So this basically means that your ticket's printed on your grocery store receipt. So when you go through the line, it makes it easier for the retailer. It makes it easier for the customer. You get just a really long receipt, and it's part of that receipt. So something that we also want to look at. And then progressives. You've heard about progressives. There's also something called wide area progressives, which is allowing multiple retailers to join together so that progressive jackpot grows. So that is something that we also want to do some additional discovery on and look for in the future is, can we do county by county progressives, or can we do a big jackpot across the whole state that everybody's feeding into? So, and then the other things on there, again, we can talk about in detail if you have questions, but a lot of just technology things that we really need to continue to work on and clean up across the organization.
I like the way you have it broken down and really well done. And just make this wait list and things that we know we can accomplish. I just think that's great.
Thank you. Yeah, thank you. This has taken a lot of work and you know, predicting and analyzing how much resource it's going to take to do something and how much time, and then figuring out the budgets. You know, as you guys have seen a lot, we have a lot of variance in budgets. We have a lot of variance also in effort that we can't really predict ahead of time. And so, you know, these are always best estimates at this point, but you know, as Ty and I and Matt and team really worked through this, it was spending a lot of time looking at the amount of staff time that we believe would go into these efforts, and then trying to prioritize them so that we can do a better job for our budgets, which is obviously something that we're looking at. You know, I think we'll see a much tighter budget by the time you guys see it in June. our timing this year has been a little bit off because it took some time to understand the governor's expectations. And so we need to go back to staff. Some of this is the first time that staff have seen these prioritized lists. And so we need to go back to staff, and that's our intentions to do so shortly and tighten up the budgets even more to ensure that this is what we're asking for. And I think you'll see even a better budget by the time you get there in June for a vote. Okay. All right, well, we're going to move on to some highlights and some improvements and things we're working on for budgeting. And I think Jamie's going to speak on that.
Hi, good morning. I'm Jamie Eglin, Senior Manager in Accounting, and Christy and I are going to share the F&A presentation, so closer, sorry, probably don't talk loud enough. Thanks. So we're going to go over some budget improvements that we've implemented this year. So last month we held a budget summit for all budget managers to walk through their department's plan with their department plan with key stakeholders. The time was used to ensure projects aligned with strategy and to remove duplicate items. This experience provided clarity, understanding of priority projects, and transparency for finance and accounting and management, ensuring placement in correct budget accounts and line items to reduce variances to misallocations. We work with budget managers to only budget items that are highly confident that they can accomplish, which Director Wells referred to. All what-if items were removed to increase accuracy and reduce variances. And if what-ifs happen, managers will work with the executive team to secure necessary funds. And we'll talk more about the investment funds in a later slide. Implementing a quarterly review with budget managers will be coming also, building on the momentum of our first summit to discuss variances and project status reports. And we still have a final meeting to happen, which is going to happen next week on June 3rd, with budget managers to discuss strategic projects in the budget and ask for final realignment of projects. So there'll be additional changes to the budget that you may see currently. And then currently you are receiving a monthly budget variance analysis. In fiscal year 25, we're going to change that to transition to a quarterly variance analysis. We believe that will give you better information throughout the year. And we've asked the budget managers to estimate the cost within the quarter, so it should be helpful with less variances. We're working on partnerships this year with finance and accounting so that we will be able to have more clarity and understanding of the budget items and be a better customer to our partners in other departments. And finally, SPEDAS, which is our favorite subject, I think. We're going to purchase and implement a software to drive compliance this year. For next year. This year it took quite a bit of time to complete the project and be compliant for fiscal year 24. And that's the lease query that Mike had referred to in another slide.
Jamie, if I could jump in real quick. So on that quarterly budget variance analysis, just so you guys understand it, again, it's hard to predict, obviously, a lot of times when these contracts will execute or will take delivery. And so the way we've done this historically is if we didn't know, the amount was split over 12 months, which we're trying to change that, right? At least predict it to a quarter. And we think by giving you this quarterly report, you won't see the crazy variance numbers that you've been experiencing. So that's our hope. We'll try that and see if that works a little bit better, but we're a little more confident that the numbers will not be as crazy as what you guys are getting in those variance reports now.
We still anticipate some variances, but hopefully they'll be closer and they'll be more explainable for you to understand.
There's always going to be movement within
Right.
a year, sometimes from year to year, but I agree. I think this will help. Certainly keep me from saying, what We're so underspending here.
Yeah, and it will keep us from saying timing. It's a timing difference, right? I mean, that's, I think what we're trying to get away from is not you having to use that word all the time. So
So this slide shows you our fiscal year 23 results with our fiscal year 24 budget to actual variance. Fiscal year 24 is based through April, but you'll see we're making progress. We improved indirect and total expense variance for fiscal year 24 with additional improvements discussed. We predict continuous improvement in fiscal year 25. You'll notice that the total expenses are decreased by 8% from fiscal year 23. So we are making progress and are happy to see that. Any questions?
I noted it in April, so thank you.
Yes, thank you. Okay, so I'm Christy Comus, Interim Chief Financial Officer, and just want to talk a little bit about our FY25 proposed budget. So we did provide you some more detailed PDFs on the budget for FY25. Just a reminder, this is our first draft. As Director Wells mentioned, we are going to go back and ask for some more realignment with budget managers. So we will have some more refined numbers coming to you in June. But just wanted to point out on this slide, kind of a roll-up of the profit and loss statement, how we are, again, improving that bottom line number, moving from 3.15% to 3.01% for our proposed budget. We do anticipate that number to go down a little bit more as we continue to refine our budget for FY25. All right, so just wanted to hit a couple of the highlights for our FY25 budget. So our net revenue based on the OEA forecast is being increased. We talked a little bit about that with Josh earlier today. Our prize payout percentages are consistent with FY24, but due to an increase in revenue, that number is also increasing, which also then increases our direct expenses that are directly related. So our commissions moving up slightly, 8.2 million, game vendor charges going up 8.5. Direct depreciation is also going up 3.2 million. This has in part due to some capitalized web subscriptions to get into compliance with GASB 96. And then also an increase in our VLT that we are adding in this next year, the 20 million VLT. Our game equipment parts and maintenance, this is actually decreasing in FY25. And that is due to a strategic reduction in game purchases, aligning our purchases with actual needs and optimizing our spending. That's allowed a significant decrease there. Our advertising expense, also a reduction of 983,000. That is due to some shorter campaign lengths that we are have made some changes to for FY25. And then our ticket costs are decreasing by 859,000. That is due to a couple things. One is we were able to receive our vendor rates a little bit sooner than we have in the past. So we were able to establish purchases of games based on lower cost vendors. And then also a little bit less scratch ticket estimates for revenue for this next year. So the ticket cost then will decrease as well.
You said that the game equipment parts and maintenance is dropping because of a reduction in game purchases. Is that we're literally not going to purchase them, or that we're delaying purchases?
we're trying to realign to make sure that what we put in the budget is what we can actually contract and get in the door and be able to roll out within the year.
So that assumes that we can purchase those games on a timely and get them in the door, sort of that first in time kind of.
Yeah,
process.
so we're trying to do this a little bit differently in that being earlier.
Yeah.
So that we know contractually that they will deliver the games. Often we put money in the budget and then we'd start negotiations and we're at the end of the year and we didn't take delivery and you see a variance. And so changing the strategy so that we're in negotiations right now for games and being able to have contractual obligations that we get them delivered on time. Which is also allowing us to be more accurate in budgeting because we know what's coming, be more accurate in the quarter that it's going to land in. And again, strategically predict where we're going a little bit better. So
We're improving our process in terms of delivering.
we're improving our process.
Yeah.
Exactly.
That's great, thank you. And the advertising expense, you said shorter campaign lengths. I've been noticing all year big variances there. Really just shorter campaign lengths are gonna give us that kind of a saving?
Yeah, so let's save that question
Okay.
this afternoon. That was I'll give you the short answer, but we have a marketing presentation and I think we can ask Shad this afternoon about that, but they have a set time period that we do our campaigns.
Mhm.
I ask them to shorten those campaign lengths because it has significant
Yeah.
significant dollar impact by doing that. So this is something we need to evaluate. In the end, does that have a huge impact on any trends in games or not? And so this is going to be a year that we're going to kind of test, does the length of that, does saving this money impact revenue? Does it not? And so it's a little bit of a test, but it is a place that it's a big ticket item and it's a place that we can actually make up some budget savings.
All right, so moving to indirect revenue and expense. So our indirect revenue, we are putting in an increase of 8.4 million. That is due to higher interest rates on our marketable securities that we're anticipating for FY25. And then for indirect expense, salaries and benefits. So we have a $1.35 million increase for our recommended salary package. That will be more detailed out in the June budget for you to see. And then we've spoken before about the pay calibration effort that we're working on. This salary and benefit line includes a $3.8 million increase for that pay calibration. And then also, if you're looking at that year over year difference in salaries and benefits, just a note to make that FY24, we did have that $7 million variance because of the OPE miscalculation. So we've corrected that. So you'll see a pretty big variance between 24 and 25, but that is really part of that difference. So our OPE, other payroll expense, is accurate this year at the 71%. So we anticipate that to be much closer. Our indirect depreciation, again, increasing to 2.3 million. This is similar to the direct depreciation that I just discussed on the last slide due to GASB 96. And then I think a big one to note, we've talked a lot about budget improvements, accuracy, reducing the number of projects in our budget. So as of this first roll up, we've been able to decrease our services and supplies budget by $5 million for FY25 compared to FY24. And again, we do anticipate that to go down or to increase the amount that we've reduced in a little bit more by June.
Thanks for pointing that out. I'm wondering why the direct.
Christie, indirect revenue up 8.4 primarily on higher interest rates on investments. Does that take into consideration that the Fed is planning on raising their rates later this year and into next year?
Well, that's a great question.
I would guess. I don't know.
I would suggest that someone take a look at it before we submit it as final.
If we get that.
Thank you.
Absolutely.
Varying opinion about whether that's gonna happen, but yeah, that's a
Right.
big thing.
Yeah, crystal ball. Yeah, we can. Yeah, yeah, we'll definitely take a look.
You're welcome to use my muddy crystal ball instead of your muddy crystal ball.
All right. Perfect. All right, so before we get here, any other questions about FY 25, kind of what you've seen for budget yet so far? All right, so here we want to talk a little bit about our proposed addition of an investment fund. So currently we have a modernization fund that you hear about monthly. We are proposing that we close that modernization fund at the end of FY 24. And with the remaining funds in that modernization fund, that we create what we're calling an investment fund. We believe that this investment fund would be able to reduce the use of contingency when we need additional funds during the year. So stabilize that contingency fund, but use it throughout the year for unfunded projects that might come up, those what if budget challenges that we have throughout the year. We'd have some money set aside to use in this investment fund. Our proposal is that we would cap this at $50 million a year, and that we would fund it each year with additional administrative savings up to that cap.
What do we have in that? It's right now, you've got it capped at 50 is what we have based on the finances, say 20? 20 in there?
Are you referring to the modernization?
Sorry, I apologize.
So the modernization didn't have a cap, so you guys voted years ago, I can't remember which year it was, to establish that account at 60, I think it was 65 million.
Okay.
Is what you put in it, and then you voted several other times in following years to increase and add to that account. So obviously, we've spent
Right.
some of that money through modernization, but there is still some residual left in it that would seed the investment fund.
What's left there that will see this? Looks like maybe 20 million. No?
So we anticipate around 9, because we do have some additional retailer partner management expenses coming out of that fund over the next few months.
Okay.
So the proposal would be moving that approximately 9 or a little more in there, plus the additional administrative savings we have this at the end of FY 24 to get up to that cap, and then future years to just fund it with additional, once the contingency is full, to then fund it with additional administrative savings. This investment fund would also each year include the $20 million set aside for our video lottery terminals for our ecosystem, instead of asking for that out of additional administrative savings as well.
Yeah, so just to remind you guys, the contingency fund has been used historically for this purpose. So when we went into COVID, for example, the contingency fund had been used for some VLT replacements and other things, and was not at its max. And so, you know, my intent here is that we would have this account as a savings account that we could use for business expense, and the contingency then gets to be what about contingency, right? About the kind of the emergency situations or the things that would be above and beyond what's in the investment fund if needed. So we truly have a true contingency should something happen. I think COVID taught us some lessons, and you see even from the ice storm, like it doesn't take a huge incident to really have a significant financial impact on the organization.
So I remember you in particular focusing on what is it we need in the contingency fund, and how many days do we need of if something bad happened for 3 months, how much do you need in that? So that might be something we have to look at again.
Yeah, that's something we're trying to get to. That number is hard to calculate actually, but that is exactly what, Ty and I have been working on it, and I think FNA knows this, and it's on the to-do list, and it's a project we're working on is the contingency actually at the amount that it needs to be at 135 million, or does that need to be bigger? And then for us to have a discussion is, what is the time frame that we should actually have in contingency? Is it 3 months? Is it 6? Is it a year? And then regulate that fund appropriately. So we predict there'll be enough administrative savings to seed this account at the end of this fiscal year, and probably have some left over to actually transfer that.
Questions or comments?
Thank you.
Okay. Do you want to advance one more, Christie? I think at this point, we're going to take a break. So let's take like a 15-minute break. Lunch should be showing up, and then we'll get started 15 or 20 minutes.
Are we on pretty much track for what you thought?
We're on track. We're like
Right.
really on track.
Wow.
Good job.
Yeah, thank you.
If I go outside, will I be able to get back in?
We'll make sure you know.
Okay.
Here, we won't start without you. Say, go out and find her now.
Yes, now.
Okay, we'll go ahead and get started. So I've asked Laura Sofro to join us today to talk about our brand promise and tracking studies and some of the insights that we have gained from those. So I will turn the mic over to Laura.
Thank you. Good afternoon. My name is Laura Sofro. I'm the Senior Manager for Analytics and Insights for the lottery. I'm going to be sharing out key results from our annual brand promise and attitudes, awareness, and usage tracking study. So these two studies are part of a broader research program that we have at the lottery to make sure that we are monitoring and measuring how we are performing and what kind of experience we're providing to all of the different members of the lottery community. Our brand promise and AAU tracking study are focused on measuring those types of sentiment measures for adult Oregonians at large, and then also for our current players. Brand Promise is a study that focuses in on gauging awareness and performance specifically around our brand promise, our marketing efforts, our responsible gaming and problem gaming awareness program. And we've been doing that study since 2016. And we include the favorability and attitude ratings that we collect from that study as part of our overall metrics tracking. The AAU tracking study we've been conducting for over 20 years. And that focuses in on measuring play levels overall and then by game. And we also collect player demographics so that we also understand playership and attitudes by different demographic segments. We use that information as part of the lottery's strategic planning to inform marketing efforts. We also share that information with the Office of Economic Analysis so that they can incorporate those results into their forecasting assumptions tied to player demographics.
Or you say conducted sense. Do you do this, both of these annually?
Yes. Yeah, so that we can gauge over time. Yeah.
We did this. We did it in 1 year.
Yeah, it's been a little while since we've come to the commission and done a working session like this to cover it. So I think this is great that we have the chance to be able to show you those trends over time. So the methodology for both of these studies, as I mentioned, it reflects Oregonians 18 plus. We have set quotas for gender, age, and region consistent with census so that the results are projectable to the state of Oregon. And we use a multi-mode approach for these studies. So we contact individuals by cell phone, online, and to a lesser degree landline, since that's much less used these days.
Percentage with that, most surveys you reach out, not everybody asks.
Right.
What's our run rate?
Response rates these days, gosh, I don't know for these studies specifically offhand, but you know, I would think it's probably in the 20 to 30% range, which is common for surveying. So I'm going to start by covering key insights from the Brand Promise study. Overall positive opinion that we observed in the 2023 study was 76% of adult Oregonians. So great to see that it's that high. This is a continuing trend that is above what we used to observe pre-pandemic. So in 2019, for example, it was 68%. And I'll be showing you those trends in a moment, but just at a high level, these are key takeaways. Awareness and knowledge about our beneficiaries and problem gambling prevention and treatment resources have remained stable or improved since last year when we did the study. Most players agree that the lottery provides games that are easy to buy and play. What we did see in 23 is sentiment, level of positive sentiment or agreement related to fair and rewarding games, fairness of operations, and appropriateness of lottery as a state revenue source did revert back to levels that we saw in 2021 after we saw a peak in 2022. So let's take a closer look at the trends over time. So what this visual is showing is percent positive opinion. So that's somewhat or very positive overall opinion about the lottery. And this is dating back to 2016, what our figures have been. So what you can see in this visual is from 2016 through to 2019, about 2/3 roughly of adult Oregonians had a positive sentiment toward the lottery. What we saw with the advent of the pandemic is that notably increased into the 76% all the way up to 80% level for percent somewhat very positive. There are a couple of hypotheses that we have related to why we see this change. I think one is the impact of the pandemic. What we saw in 20 through 22 is a real sense of appreciation for what the lottery, the role that the lottery had during the pandemic. So it was a stable revenue source. I think people really appreciated that. So we see some of that in this increase. It's probably also worth noting that about 5-6 years ago, we changed the tone of our marketing. So prior to that time, it was a more humorous type of messaging. And then at that time frame, we changed that messaging to be much more about our beneficiaries and the role that lottery funds play in funding programs that Oregonians care about. We also changed our tagline from "We do good things" to "Together we do good things." And I think over time, that change in messaging has probably helped with the figures as well. I think we also, want to note that over time, we've changed the distribution of methodology. So going back to 2016, we used to conduct the survey fully by phone, landline phone. Over time, we started adding cell phone. And then in 2019, we started adding online surveys. So what we find is among our online respondents, they do tend to be a little bit more positive toward the lottery. However, it wouldn't account for this notable of an uptick between 2019 and what we see today.
The people we reach out to, are they online players? Is that how we reach out to them? Or do we reach out?
We reach out to Oregonians 18 plus. Sure. All right, so I mentioned what we refer to as fish-related attitude statements, right? So these are about fairness, integrity, security, honesty. Two of the statements that we ask Oregonians to respond to and rate in terms of their level of agreement is lottery is an appropriate way to raise revenue for Oregon, and the lottery is operated fairly and honestly. So again, over time, starting from 2016, what you see is an upward trend that really notably takes off in 2020. So we go from 42% who agree that the lottery is an appropriate way to raise funds for Oregon in 2016. Currently in 2023, that's 57%. Now, that peaked in 2022 for some of the reasons that I already mentioned. But we are still at levels that are above what we saw pre-pandemic. Same is true for the lottery is operated fairly and honestly. So if you go back to 2016, you're talking about 42%. Currently, 52% of adult Oregonians agree that the lottery is operated fairly and honestly.
Question that you might not be able to, excuse me, but I'm wondering, other states, I'm sure they have surveys, they have the citizens feel about the lottery. I just wonder how are we in the mix of anger that's
I'm not sure how many jurisdictions would be asking these particular questions, but it's certainly something that we probably want to be thinking about and reaching out to other jurisdictions to see if any of them are asking questions along these lines, just so that we can compare over time.
overall?
Favorability wise, with the, 70% plus figures that we get, the 76%, we've looked at a couple of other jurisdictions, so it's not comprehensive, but we're where we should be. We're either aligned or at the higher end of what we see in other jurisdictions.
And along with the earlier question, I mean, I think it's appropriate that we reach out to all of them, that subset, which of those are players, which of them are not there.
We do segment by those. So some of the results I'll be showing you are for players specifically. And if you were interested in seeing any of these breaks by players specifically, so for example, overall opinion is 76% for adult Oregonians. I believe that has continued to be higher for players, which you might expect. All right, these measures are focused on beneficiary awareness. So year over year, what we find is awareness is highest with respect to Oregonians understanding that the lottery funds contribute to state parks and natural resources, public education, and problem gambling prevention and treatment services. And generally, we see stability across those measures. So for state parks and public education, ratings are stable year over year between 23 and 22. And we saw a nice 5-point increase for problem gambling prevention and treatment services and Oregonians' awareness that lottery funds contribute to those services. We also saw an increase from 76% in 22 to 81% in 23 for Oregonians being aware that problem gambling treatment is available in Oregon. 75% are aware that problem gambling services receive lottery funds. That is also an increase from 70% in 22. And we observe stability for Oregonians being glad, the agreement with the statement that they're glad that lottery dollars fund free problem gambling counseling and treatment in Oregon. We also capture what we refer to as our customer experience FIRE attributes. So that stands for fairness, that our games are fair, intuitive, rewarding, and entertaining. And we capture this year over year. Our ratings continue to be very high for lottery games being viewed as easy to buy and easy to play. 3/4 of players also find lottery games fun to play. But when we look at lottery games offering great prizes, that goes down to 65%, and that's a decrease from 2022, which at that point it was 73% of players agreeing that lottery games offer great prizes. And we saw a notable decrease, a statistically significant decrease in agreement for lottery games being considered fair. So that went down from 56% in 2022 down to 41%. So we're going to be monitoring that very closely. We're going to be asking about fairness as part of other research that we're going to be doing both for the remainder of this fiscal year and into fiscal year 25.
We've had to prove it. So, can't really honestly blame this on the pandemic. But I wonder if is it related to the sports thing?
There's nothing that specifically would point to sports. I think we saw a kind of a peak in sentiment, a peak in play. There was a lot of pent-up demand leading up to 2022. We also saw for 23, we had more light players playing, and that was driven to some degree by the billion-dollar-plus jackpots. And so one hypothesis could be that we have folks who maybe were lapsed players previously coming back for those particular jackpots, and maybe they didn't have sentiment that was quite as strong as, more loyal players, but we can't conclusively say one way or the other. We're just going to keep monitoring until we have a better handle on what's going on there. Okay, I'm going to switch and talk a little bit about our attitudes, awareness, and usage tracking study. So in a nutshell, again, fueled by Powerball and Mega Millions jackpots over $1 billion. In 2023, we saw lottery play increase to 54%, which is a level that we haven't seen since 2019. Lottery's most popular games experienced a year-over-year increase in light players, restoring the historical core to light player balance. So more of a close to 50-50 balance between those two, whereas in 22, we saw an increase in core playership. And what I mean by core versus light, core players means that they play at least monthly. Light players have played in the last year, but they play less than monthly. It could only be that they've played a couple times a year, and that's it. Yeah.
In the past, I think we have shown us your demographics, but I'm curious about particularly the lottery games, Acadia was one that
Yeah.
How do we determine that? Do we have data on that?
Yeah, we ask about age as part of the survey. We ask them a wide variety. So all the questions that we ask of the general population, we also ask of the players. So I can show a little bit of that, and maybe it'll kind of illustrate it a little bit more clearly in a second. It's like, I think two.
But the other thing that strikes me is who's playing for this level.
Yep.
Maybe it's a thing.
It is. What we do find, though, is that the majority of our players represent those age groups that are at their peak earning stage of their lives. So what I'll show you in a minute is that the youngest age cohort and the oldest age cohort, you do see a smaller percentage of those groups playing, but they do nevertheless play. So I'll speak a little bit more to that in a minute. All right, so just to talk a little bit more broadly about just play trends. So this visual shows that the dark blue line is current players, and this is percent of adult Oregonians. So 54% in 2023, 54% of adult Oregonians are current players. 29% are non-players, and then 17% are lapsed players. So what you see, and it's kind of a trend that started in 2020 for the lapsed player group. Lapsed players has decreased from 25% down to 17% in 2023. So that's why we're thinking that the players that have migrated to being players, the lapsed players have migrated to being players, and we think that it's a function of the Mega Millions and the Powerball billion-dollar jackpots bringing them in for those huge wins. All right. I'm going to share some play trends. So just starting with what our most popular games are in terms of percentage of Oregonians who play our games. The most popular game that the lottery offers is Scratch-Its, with 36% of adult Oregonians being current players of Scratch-Its games. That's followed by Powerball at 30%, Megabucks at 27%, and Mega Millions at 25%.
That's over the DLT.
Yes, when you look at actual proportion of adult Oregonians who play video lottery, it's 16% currently. And for Keno, it's 9%. Yeah, so there is a difference between popularity and how many players play versus revenue impact. On average, there's a lot of cross-play across our players. So most players enjoy, on average, 3 lottery games. And cross-play is most common among players of jackpot games, video lottery, and Keno. Okay, and now let's talk about generation. So we ask questions about age as well as a number of other demographics, but we're focused here on the age demographic. So we wanted to get a better handle on whether we were seeing differences over time for different segments. So, for example, when we look at somebody in the Gen Z cohort, 19 to 26 years of age, between fiscal year 17 through to 2023, do we see stability in what percent of that segment is playing lottery? And for that particular segment, the answer is yes, we do see stability. It sort of hovers around that low 40%, 39%, around there. So in 2023, 38% of Gen Z played lottery. When you look overall at who represents most of our players, it's millennials, Gen X, baby boomers, the folks that are at their peak earning life stages. So it's at those tail ends where you see a smaller percent, but a stable percent over time of the Gen Z segment and the greatest generation silent segment.
I didn't see in the presentation, but I think I heard you say a minute ago that you do look at that. What are these groups playing mostly? So are the
They're-
millennials mostly doing traditional? Are they, how do we know?
There, so I can absolutely pull that for you. I don't have it handy right
Right.
now.
Follow
I
up,
think,
that's a follow-up then.
yeah,
I just am
but-
curious.
but overall, they play a variety of games. We do see some different concentrations depending on what game you're talking about. And so I'd be happy to work with Carol Ambruso, who manages this project, and have her pull something for you.
This is purely my curiosity based on assumptions I make that are probably wrong because I have no data behind. But my assumption has been that the Gen Z or the millennials are playing the sports betting. Could be entirely wrong. Maybe the Gen X does too. And that as you get older, you're playing the more traditional or possibly the VLTs. As I said, I'm probably entirely wrong because that's just an assumption I've made, that the sports betting would be attracting younger players.
Yeah, what we find is that it's not quite
It's not
so cut and
that
dry.
black and white.
But a little bit of what you're talking about is at play. And I think, what we can do is we can show you both by the age segments, like what's the distribution of what they're playing, and then we can also show you by game, kind of what's
And-
the distribution of age.
And ultimately, it is to me about the lottery thinking through, are our games and the things we offer to play, are they sustainable in terms of the demographics of who's playing them?
That's part of why we wanted to take a look over time.
Uh-huh.
to see if we were in fact remaining stable and sort of, kind of reading into that relevant. When you look at the Gen Z group and the millennial group. And so far, we do appear to be maintaining stability in terms of those two groups' interest in
But as those
lottery.
groups get older, I'm overthinking this, I know.
No,
but I'm
you
trying to
know,
look at this and think,
This is good. This is what we overthink about too.
Yeah. if we're getting only 9% of our players in the Gen Z group and it stays at 9%, I feel like we're losing demographics of the back end.
Well, it
Am I not
It
thinking of
actually starts to go like this this
It does.
this has been the trend up
Okay.
up until
It
this
does
point.
grow over time.
It grows as their earning potential
Okay.
grows.
So it's more tied to their discretionary dollars
Yes.
than anything else.
Yes.
Yeah, and I would just add, this is something that, well before my time, Barry was paying attention to, Josh
Yeah.
was paying attention to, that there was a concern that people
Yeah.
would age out, right? Video lottery wouldn't be appealing. It's an older demographic. And he's reported that that is not proven
Yeah.
true.
Interesting.
So, I mean,
Do
it's
they get-
something that they are not even building into the forecast anymore, because he was building in that potential
Yeah.
that there would actually, we would age people out of that gameplay, and that has not proven.
Yeah. So,
To what she's saying, I think, is what we believe is more true,
right.
Aging
that
into
it's, you're
You're
aging
aging
into
into
it.
Yeah.
And it's the earning potential. It's where you are
Yeah.
financially.
So again, anecdotal, that there's no basis in any kind of data. When I look at my son, who is angry because he can't play right now, right? He keeps saying, when are you done with lottery? Okay. Does do some betting online, not lottery betting, but,
Yeah.
he would do the sports betting, right? And he's, I think, 31, 32. He's not going to, at the age of 50, suddenly do traditional or VLTs. He's just not, that's why I keep thinking, are these players wedded to the games they're playing? And yes, maybe they play more as their dollars get more and more discretionary, but he's never gonna get the tickets, okay? And he's probably never gonna do a VLT.
Yeah, and I think it's more about play drivers, and demographics absolutely plays into that. But
Okay.
I think we can't discount that different people have different motivations for why they like gaming.
Okay, so it isn't necessarily tied to, you gotta, if you're not doing sports betting and I get older, I'm not doing you, if you stop doing, I'm trying to figure out that aspect.
Yeah,
And I don't, not looking for
I
answers.
think
I'm
there's,
just-
I think there's a lot to it. I mean, and I think let's
more complex.
get her to pull some data and we can show you what we know, but I think it is very complex because like we talked about this morning, there's a lot of change just in digital everything, and what the
Right.
future looks like. Who knows?
That's right. And I
So-
think it's probably, you're right, that it's more about the digital platform than the actual games. I think you're absolutely right. But one of the reasons I even focus on this is because we're hearing that Oregon's becoming more and more a young demographic,
Mhm.
okay? And so if that's true, I think we need to think a little bit about what's gonna attract them. And if they're never gonna do scratch-its, and they might, I don't know, but.
Actually, I
They
think
do
there's
love
there's a notable segment of younger players for whom scratch-its are
Yeah,
their
see.
entry game, and they enjoy it quite a bit.
I run in a very select group, obviously. Children who can't play the lottery, but would like to.
Yeah, and I
Yeah.
think that just feeds into, again, what you and I have talked about and what we've talked about today is that, scratch-its are very popular amongst different
Yeah.
demographics, but if you got to a place where they could be digitized, then you're also
might be
appealing
much
to a
more
different
interested.
demographic, right? So there's the
Thank you.
the people who still want the physical, and there's the people who want the digital, and they're totally different people.
I,
So-
I think you're absolutely right. It's not the game itself, it is the method of delivery in part.
Yep.
Yeah, interesting. Thanks. I'm sorry, I keep
No
interrupting you.
problem at all.
Don't
And
we
then-
also have another factor involved in that people who are playing the sports betting now, it wasn't available
Right.
2 or 3 generations ago, 2 or 3 age groups ago. So we couldn't bet on, through the sports gaming. You go back a little further, there was no such thing as a video lottery terminal. Okay, so it wasn't there for us. So if a particular generation starts getting involved with something that's new, they're probably going to stay with it. But there will be other new things coming behind them that may entice, or would probably be intended to entice the younger generations. So I think you got a rolling factor that's going on here that is going to preclude to some degree, them aging out of the lottery.
Yeah, there absolutely. I think you're
IMHO.
touching on all the different factors that are at play, macroeconomic factors, competitive factors. So, right, there are a lot of things that sort of make up this puzzle.
I mean, they're good bookies for those.
Yeah.
Right?
Right.
And it's just, I think it's just gonna be, not everyone watches sports and plays sports and, has that much interest in it, so.
Right.
We've talked about it for 8 years, sports betting, but.
Yeah, it's the mainstream, right?
Yeah.
You don't have to go find a bookie.
Yeah.
It's more acceptable. It's part of the excitement of sports now. It's advertised that way, so it's that
So-
aging in, like we talked about.
I'll kind of wrap up sort of this overview just by talking a little bit about the demographics that we do track. So it's gender, age, income, education, region, ethnicity. We've added veteran status since it's a lottery beneficiary. And what we do each year is we look at the latest census data for Oregonians 18 plus. We use the American Community Survey through the census. And we compare it to our overall survey population. And then we also look at current lottery players. And what we find year over year is that lottery players are very similar in their makeup overall to the population at large, the general population 18 plus. And that's it. Any other questions?
Fascinated that women, of course, as you say, it aligns with the demographics largely, but women play more than men, not significantly more, but
Yeah,
I would have thought that was.
yeah, perhaps different games and different distributions, but yeah. All right, well, thank you.
Thank you.
Thank you, Laura. All right, I'm gonna ask Stacy Shaw to talk to you guys a little bit about our responsible gaming and an effort to reach some more players. So Stacy, the clicker, the big button in the middle advances the slides. Now your mic is on.
The big button in the middle.
The big button in
Okay,
the-
thank you. Good afternoon, Director Wells and Commissioners. For the record, I'm Stacy Shaw. I head up our product marketing group. And I'm here today to talk to you. Yeah, I can manage the big button. There we go. About some recent efforts we have in reaching more players. I know most of you are familiar with the work we do in this area, and it's primarily been about making sure people understand safer play strategies and also about how to access treatment and services and resources, which is a noble and important thing to do. But we had a hypothesis and a fair amount of now data that says there's a whole group of people who have could benefit from support and services that we aren't reaching because we're driving exclusively to get treatment. And so we undertook a big effort to reach more players at more points on their help-seeking journey, is how we refer to it. This is really important to align our messaging and our marketing and our content and all the things we provide, including the services that our colleagues at OHA provide to people. We've been doing this in concert with them. It makes very little
sense to do different and better marketing when somebody shows up to get a resource and it's not as promised. So we're making sure we're working that way. We started by focusing on inclusive language and stigma reduction. Stigma and non-inclusive language are two of the major reasons people don't seek help. And it's particularly, now that you were talking about sports, I just wanted to bring up, it's particularly relevant when we talk about people entering the market, playing sports, and the way we talk to people is not the same. They don't respond to messages the same way. They don't think about gambling and gambling issues the same way as somebody who perhaps plays a VLT. So it's really important that we start to understand stigma and focus on that and get rid of it if we can. We also want to remove barriers to reaching out and engaging with players who are just beginning to experience harm. We have, again, the idea here that if we get to people sooner and get them help, get them tools, they will be less likely to end up at the end state where they absolutely need to get into treatment or have life consequences. We started to build content and test marketing designed to reach players in this group, and we are at the point of doing iterative improvement enhancement. So I want to talk to you about what that looks like. The first thing we focused on was getting our language and stigma reduction in order. And we worked with some industry luminaries, if you will, to develop a inclusive and non-stigmatizing language guidelines to inform all of our outreach. We shared this with Oregon Health Authority, who crosswalked it into how treatment and prevention professionals use it. And we focused on a number of things. It's how do we talk about people? I mean, I'm sure number of you have heard somebody referred to as a gambling addict, or even just a gambler. How do we talk about seeking help? What do we make that sound like? What does it mean to people? We want people, usually, if we do marketing for a game, we want to talk to them about what we'd like them to do. Buy something, enter something, try something. What are we asking people to do when we talk to them in these messages? Contextually relevant messaging, a little bit of marketing speak there, I apologize, but what we found was we were doing things like having a big billboard that talks about recovery when people haven't even identified as having a problem, where something like that might be appropriate in a doctor's office or with our prevention provider. So we want to make sure the message matches up to the life stage where somebody is. And then one of the things that is quite often overlooked is what about all the people that are affected by someone else's gambling? How do we get them? There's help for them too. And so how do we make that meaningful and get them to try that? What does it look like? So I just put up a couple of examples for you. Our website used to say recovery starts here. Well, a lot of people aren't ready to even think about recovery. They haven't gotten to that. So we moved to a change methodology. Everything is about change and change that you can make and be empowered. We used to say help for gamblers. Now we just say help for me. We used to talk about, we made sure we talked about professionals, so people feel like this is, very pragmatic. We used to talk a lot about treatment, and I'm sure everyone in this room has some sort of negative connotation with the word treatment. And so it's now counseling. We're hoping, and this is a marketer's dream, that we can get to the point where people think about getting help as more self-care than something like treatment. And we want to introduce options beyond counseling. So we used to just say, get counseling, call the helpline. Now we say, whether you just want to chat, get more information, or be referred for counseling, you'll be connected to the resources that are right for you. And our colleagues, again, in OHA have made more resources available for somebody who can just pick up the phone and talk to somebody. They don't have to automatically get enrolled in treatment.
Stacey, is this the OHA's influence on these? I think these are really significant changes, small as you say, but amazing. Even just reading through it, I was thinking, wow.
Yeah.
That would definitely impact the person receiving the message differently.
Yeah, it's been something we've done collaboratively, but we've been sort of taking the lead on this portion of it, the messaging, and then crosswalking it for them because their professionals have different uses than we do. But we have engaged with some people that are really advanced in this area. We have some consultants that we use that are just amazing, really. I want to, before I show you one more fun pictures and things, I want to ask you all a question, since you're asking questions too. Do any of you recall in January or February getting served in your social feeds or online information about maybe cutting back on drinking or trying Dry January or trying a mocktail instead of no, no.
was designated.
I'm hope.
You barred those from me.
I'm hoping that I'm not the only one that can answer yes to that.
Did they
But
designate January as the non-drinking month?
Dry January, right?
Thank you.
So there's quite a lot of work and a lot of movement in the alcohol reduction area, we called Sober Curious. A lot of things being promoted that you don't have to quit and you're not an alcoholic, but think about what's your relationship with drinking look like. And so if you go online and you look for cutting down on drinking, you're going to get things like this. If it was in January, you might get Try Dry January. You might get all of the new Katy Perry non-alcoholic beverages that are being introduced. So there's a lot there. And none of this is really stigmatizing. It doesn't come up with, you're an alcoholic, you need to stop today. So, but if you do the same thing for gambling, I typed in cutting down on gambling. I get 12 tips on how to quit gambling forever. I get a definition of ludomania and degenerative gambling. So it doesn't help me because we have some research that proves that most people don't start by thinking they want to quit. They think they want to moderate. So we had a lot of data, and I'm not going through this with you, so don't panic. But we had a lot of data and theories about what it looks like for someone who's just starting to emerge to have an issue. See it a lot in younger folks, particularly in the gambling space, which is why this is really timely that we're working on this. But we came up with Wally, and he went from being a casual to a heavy video lottery player, and he has a journey that is filled with stigma. And I'm just going to point out one thing here, but Wally starts to think he might have an issue, and he reaches out because we said you can just chat, and he gets on the phone and someone tries to enroll him in treatment. He's done. And we missed that opportunity. So we wanted to this was something we did based on what we know today, but we wanted to try and validate this. What does it look like for these folks? We got in front of 60 treatment and prevention professionals. OHA had a summit, and we were there and we talked to folks, and we asked if you ever worked with a Wally, and some of them said yes, and some of them said never. And some of them said, we know them, but we don't work with them because they don't come to us. We asked them why. And again, things like stigma, messaging in a way they see themselves. It's hard to find them. It's hard to reach them. So we were armed with this, and we started to do research and test things. So we developed a phased research thing to test the segment and understand the segment and test the hypothesis we had about what was driving this. We did a literature scan. We spent a lot of time looking at the Sober Curious movement to see what could be crosswalked from there to help people with gambling. We interviewed professionals. We interviewed treatment and prevention providers, some research people, some clinicians. Then we worked with people who said they had they had some concerns with their gambling. People who had concerns in the last, I think it was 2 years. Looking at Laura because her team did this. And we had them, I believe we ended up with 50 some people filling out an online digital diary that was over 2 days where they looked at their behaviors and things. We asked them questions, and then we narrowed that down to people, some segments within that to do some in-depth one-on-one interviews. So we could really understand what was going on with this group of people. Concurrently with this, we knew enough to start developing and testing marketing and marketing outreach. So we tested marketing to reach players early. In December, we launched moderation. We launched a whole new page and a whole new segment on the Oregon Problem Gambling Resources website about moderation and change. We leveraged the resolution timeframe of December through February to do some thinking about what your gambling looks like a year from now, some PSAs that we did. And then we started to devote about 20% of our digital marketing to drive traffic to this new content. I just wanted to share a little bit about the content. On our moderation page, we started to give actual concrete tools. It wasn't just set a time limit, stick to a budget. We talked about, here's a workbook to understand your relationship with gambling. Here's a quiz you can take. Here are budgeting tools that you can keep track of your budgeting. They're not, none of them were gambling specific, but budget tracking, we all are tracking every movement, every step we take, every calorie we ingest, and every dollar we spend. So this is something people are really interested in. I don't know if I can show, this is something that directs you to this, but I don't know if my clicker is going to work on that. Nope. So I will make sure you can see it later. So we've been doing all of this, and this has been an effort that's been ongoing for about 8 months now. And so the question is, what did we learn? So what? And now what are we doing about that? So key findings from the research. In the research, we found that there were 2 segments. We had people who took some action and they had a better relationship with gambling. They used more resources but they continue to look for support to reinforce their new gambling practices. They appreciate in-person and virtual digital options. We had people who took minimal action. This group was very sensitive to anything that implied addiction, and any support that made them feel like they had an addiction problem. They were interested in resources that focused on their well-being and improving lives, which is a wonderful thing. We had people react to the moderation page that we launched, and it was very, very well received, liked by 25 of the 26 participants. The budgeting tools were very popular, the instant chat and the videos. The key learning here, and this is something that our colleagues at OHA are also finding, is that the majority, when you engage with them in the early stages, don't want to quit gambling. They're looking for ways to continue in moderation. That commitment changes and fluctuates, as all of our commitments do. But what we want to do is try and help and support them wherever they are and move them through a journey that works for them. With marketing, the digital marketing that we're doing, we call it Change Creative, was generating very good responses and actions. And by actions, that means they looked for a meeting, they watched a video, they did something. They didn't just click. In some cases, this outperformed the treatment focused creative. And I do want to say that it's still important that we talk to people and they know how to get counseling if they need it. That's important, but this is also important as well. We're seeing that 24% of the people who visited this site during January to March visited and viewed the new moderation content, which is great. And the top performing assets are the budget apps, very, very popular. We had some habit tracking apps and video content, some workbooks. And then we also tried to connect people with community. People are likely to engage with there's a very active gambling issues site on Reddit, for example, which is where a lot of also where people who do sports gambling spend a lot of their time on Reddit. So there's a lot of making sure people can connect with people they think get it.
Are we getting all of the responsible gaming partners out there? Are they giving you feedback about this and positive? And
Yeah. So yes, we've been working with the Oregon Council on Problem Gambling, Oregon Health Authority, some of the advocacy and treatment groups. We get out. We were just, like I said, we went to a summit where all of these partners came together and we presented, and they were really excited about it because they're seeing that change and they want more people to reach out and get help, but we need to understand how to talk to people at different phases. It's not a one-size-fits-all thing. So few things are these days. What are we doing now? Obviously, the work's not done. We are collaborating with OHA. We've shared this data that we got from the research with them. In fact, we did a So now what exercise with them about things they can do as well as things we can do. We're supporting new tools and technology jointly, and we're trying to make sure that their services are aligned with the things that we're doing outreach. Next month, we are going to be piloting an app. It's the first gambling-specific digital health app. This app offers solutions wherever you are in the journey, whether you want to quit, reduce, or just be mindful and have safer play. Oregon Health Authority made it available to their their counselors to, takes a while to get used to the new language, made it available to their counselors to offer as part of the treatment program for people. And then we are going to offer it to Oregonians, particularly focusing on the reduce portion of the app. We continue to optimize our digital marketing and really leverage the things that are working and they're getting responses and actions. We're developing new videos, new quizzes, and we're doing outreach to all of our responsible gambling industry partners to find the communities their people are using so we can promote those. And we're moving on. We're doing probably a similar research study to what we did for people with early issues to understand about how do we communicate with people that are affected by other people's gambling, because that is a big population, very hard to find, and we want them to know that there are tools and resources for them as well. So that's all from me today. Any questions?
It's very impressive. Thank you, guys.
We're excited about it, and I think probably the most exciting thing is that it's bringing all the stakeholders together at the table, and everybody's kind of aligned on wanting to reach more people, help them. So,
Thank you.
thank you.
Thank you, Stacy. All right, Shad. Ask Shad to kind of give you guys a marketing update and what you will see coming in next year. And a little bit of what happened this year.
Yeah, it's a whole potpourri coming up. For the record, I'm Shad Barnes, Senior Director, Digital Marketing for the Oregon Lottery. Commissioners, Director Wells, thanks so much for having me in today. Let me see if I can get the clicker right without making too much noise. Okay, so yeah, as Mike put it, here to share a little bit about kind of some stuff we've done recently and a little taste of what we have going on. We are a very active department, so you guys are getting a hint. We have a lot going on. So I'm at a kind of a nice part in this segment in that a lot of what you guys have heard today kind of connects to work we're doing. So I think there was a question earlier I'll follow up on as well. So just a couple things. So starting off, some of the directors some of the commissioners are new. So I wanted to kind of get going with a little bit of just like how we do, what we do, why we do it, kind of thing. So, in general, our marketing kind of focuses on 3 categories. And those 3 categories are right there on the screen: brand, product, and problem gambling outreach and education. So you just saw a lot of the work Stacy was showing was work that our department is putting in around the optimization and the creative messaging and kind of the ad buy stuff. The brand is where we really focus on kind of connecting the good things with the gameplay so that they're tangible kind of examples. Laura talked a bit about favorability. We changed the way we do brand marketing about 4 years ago, which just happens to coincide with a big part of where some of that favorability started to go up as well. And we really, again, that authentic kind of tangible manner makes a difference for the folks that are looking at what we're putting out there in the world. And then finally, product, which is really about maintaining revenue. We don't spend to grow necessarily in product. Really a lot of that is calling to action for driving foot traffic to retailers and engaging with our own channels. And I'm going to talk a little bit about kind of that engagement in a moment here. Now, there's a big part of who, right? So we call it the branded house, which is this visual you see here. I'm not going to read everything from the visual, but it really correlates to players, overall Oregonians 18 plus, and the overall community. And so when you talk about community, things like problem gambling, responsible gambling outreach, and things like that. And then each kind of has their own favorability goal in terms of kind of those audiences under the branded house. And so when you kind of talk about players, it's about engagement and awareness and sales. And then in terms of just Oregon and 18 plus, awareness. So awareness that it really does do good things, because it really does, right? Our dollars go towards the programs and projects that Oregonians care about, voters care about. And then finally, the community is really for the lottery about favorability in the brand. So, and again, I get to piggyback on a lot of the stuff you've learned today. So I don't have to spend much time on, intuitive, entertaining, rewarding, and fair, but that's always a goal of all the things we're doing. So then there's a what, and that kind of gets into some of our key strategies, and really those are communication strategies for the most part. So like I mentioned before, we do connect on kind of that gameplay connecting to the good things that are funded by what we do. We take a really data-driven, insight-driven go-to-market plan. So some of what Laura showed with you is what helps kind of fuel how we research and how we go about our communication and our messaging and who we're speaking to. A lot of the generational research and the things you guys asked about go into our planning. And really, we follow what most brands follow, kind of a funnel-based approach to kind of budget and plan and put together what we're working on. And really, the kind of the tip of that funnel, the very end of it, is this one-to-one connection. We've put a lot of effort over the last several years of kind of building up our digital channels so folks can engage and learn a bit about more games, scan their tickets to see if they won, for instance. And I'm going to have some data here. I'll show you kind of where we've been with that one-to-one connection. But holistically, we tend to try to prioritize that brand campaign reach. We try to always optimize. Authenticity is a really important word to us. We don't like to use a lot of stock imagery. We want real Oregonian places with real Oregonian people to show up. And then, for us, our games are mature, right? We don't launch a lot of new games. And so our product advertising, we really try to kind of lean into efficiency, and we do it in a pretty limited way. So going back to kind of that authenticity, we work hard on the creative because the limited spend, in order to kind of get the maximal effect, it's a good creative makes a difference when you're not spending as much. If you compare us to other lotteries industry-wide, we're pretty low percentage of spend against revenue when you compare against the other lotteries in the U.S. And then
Chad, do you have that information in here? I
I don't have it in here, but I can provide that for you. One of the industry groups, LaFleur's, keeps that data every year, and we have that. And we always kind of take a look and benchmark where we're at that way. The numbers are a little different. We tend to go apples to apples with that number. So it kind of takes out video lottery revenue. And again, our spend is favorable either way. I mean, very low either way, but against that, we're also still favorable if it's just as if we only made traditional dollars.
I suppose going forward, we can do sports betting though, because some other states do that.
Yeah, yep, absolutely. So this is a graph, obviously, and the big spike you see there is holiday. And so when I talk about that one-to-one interaction and engagement, and a lot of what we do is digital, and we don't necessarily do big campaigns around download our app. It's not really a revenue producing thing. It's a convenience for folks. But our holiday campaign is our longest running and kind of biggest campaign of the year. And it's been ingrained with Oregonians about giving gifts and doing all these other things. And so you'll see some of these other big swells that you see in the data are the Powerball run-ups when we've got a lot of folks scanning to see if they won. There's a little kind of purple blip just kind of towards the tail end there. That is raffle. One of the cool things about raffle, the last 2 years, about half of all the people that purchase games, so 125,000 people, have scanned to see if they won with the app. That's a tremendous digital engagement when you think about kind of the effort it takes to download and do that. But again, the big spike is the one that we really are kind of proud of because we don't necessarily tout it, but we always put a little nod to the app over the last several years. And pretty proud to say that we crossed over the 1 million registered user barrier in 2024 at the very beginning of the year. And again, it hasn't been necessarily big campaigns driving it, but just a constant drumbeat and nod. And there's a lot to say for any industry about that engagement and kind of what it means to learn a bit from players and also really provide the convenience and the customer experience. That's a big kind of pillar for the governor's office and everybody else for our players. And again, stop me at any point, guys, if you have questions. I'm kind of whipping through this a little bit. I've got a lot of slides to share. Another bit of what's really important to us is representation and inclusion. You can kind of put it under multicultural or DEIB. There I could go 2 hours talking about how much we kind of work on representation and inclusion with what we do. Speaking specifically around Spanish language, we do produce about 20% of our assets come out into a Spanish language versioning. Again, if you think about those three categories I talked about before with brand and RG and all those other bits. And this is a place for our team that is of constant purposed continuous improvement. So we're always looking to get better. And the best examples I can give you is out in the world, if you've ever used like a translator app, it's not great, right? If you've ever gotten like maybe a manual for a, VCR repair or something like that back in the day, the English wasn't always perfect. And we work very hard to kind of transcreate as opposed to just translate and make that meaningful to the folks that are kind of, connecting with what we're putting out in the world. So transcreation, just in a nutshell, is really about taking the words and putting them into the proper sentiment and the proper cultural aspect and tone. You think about all the idioms you use every single day, and those work into our stuff all the time. And for years, we just translated idioms thinking, well, that should make sense to everybody. And, they don't. So we've made a pretty big significant step in the last couple of years to really write the scripts from a Spanish kind of cultural and transcreated perspective first and have it kind of match up. In order to save money, the visuals like on a TV commercial or some of the video or, anything else we do are the same. So we really have to be thoughtful about how all that puzzle pieces together in order to stay fiscally responsible. So that means we often use the same talent and kind of, again, think through who those people are. And then what you don't see a lot in Oregon Lottery commercials is actors speaking to the camera, because trying to be fiscally responsible, we use voiceover talent that kind of narrates the story rather than that. Some of the recent ones, so our holiday commercial, we had an English and Spanish on-screen dialogue difference. We have some state parks radio. One interesting example of kind of that transcreation and cultural relevance is we kind of focused on bird watching. State parks, there's a lot of folks that love bird watching, not necessarily culturally relevant for a Latinx group of folks. We have some folks that give us consultation out there, and their advice was that's not necessarily relevant. So why don't we use fishing instead? So we switched kind of the tonality and again, that transcreation over to fishing. And then in a recent Play It Forward education, we adjusted our edits for Spanish voiceover. I could talk for hours about this. So this is just a quick run over on how we go about representation. So like I said, I'm going to give you guys just a couple quick hits on some recent campaigns. We, over the last 18 months, have done Play It Forward, which was kind of a mnemonic that we replaced together. We do good things for a bit. It really was a thematic shift we put in. Our last campaign to kind of run in that was this Play It Forward education campaign that just finished up in March. And we really sought to connect Oregon Lottery gameplay with transfers to public education. And at the end of the day, we delivered 32 million statewide impressions and got about 88,000 people to visit education-related pages on OregonLottery.org. It was a great campaign, and again, a really brand-focused campaign. The things that you saw before with favorability that's kind of what we track to at the end of the day for campaigns like this. Additionally, around that same campaign window, we have had a really tremendously gratifying relationship with the folks in public education in Oregon. And one of the things we sponsor is the Oregon's Teacher of the Year. We've done that for the last several years, and it does equate to a large campaign for us. So this year's Teacher of the Year was Dr. Mandy Vance. She's a teacher at Cedar Ridge Middle School in Clackamas County. And we did a nice kind of video spot that's 2 or 3 minutes. We put some digital stuff out in the world, served about 4 million impressions. We delivered that to more than 45,000 visits to that site. And on average, users spent about 2 minutes per page when they came to those site efforts. It's really great in that we've all had a teacher at some point in our lives that have kind of made a difference in our education and our adult lives. So we tend to kind of connect to that with the Teacher of the Year work. And one of the big growth moments for us this year was we did a lot internally as staff to get out. So there's a regional Teacher of the Year element to this whole thing. And we had lottery staff at every single one of the regional Teacher of the Year kind of awardees. And that actually resulted in a lot of earned media press coverage for us around Teacher of the Year campaign and Teacher of the Year experience. And they're always special. Every year, it's just gratifying to see how amazing these teachers are in Oregon. They're at the pinnacle, obviously, as the Oregon's Teacher of the Year, the pinnacle of what they do. And it's really amazing to kind of be a part of. So I'll show you.
When you, on the slide where you said play it forward,
Yeah.
that you delivered 32 million statewide impressions. I'm just curious, how do you get you sought to connect with transfers to public education, focus audience? How do you reach out to these people to get them to participate?
So it is really a very tactical approach. So you think about how do you get to reach people? We live in a very fractured media environment today. So one of the kind of mantras for us in our department is a right message for the right person at the right time on the right channel. And that's a lot of elements that we're trying to kind of piece together. So when we buy media for something like Play It Forward Education, you know, there was a time in all kind of companies or, you know, corporate existence where you just bought TV commercials and that did it, right? Well, you guys all know that doesn't work anymore. So, and then Stacy brought up, again, not to get marketing speak of you guys, but contextual relevance, right? So for each of these channels we buy, whether it's TV or digital or radio or connected television, like we have to be experts on a lot of channels today, and we have to kind of devise the right message for each of those channels. You guys get to hear me give you like a very kind of high level perspective on what that is. So how do we do that? You know, for this campaign, for instance, we delivered probably 600 different assets across 25 channels when it was all said and done. And we're tracking each of those in campaign window. We're optimizing out the things that work and the things that don't, just in order to deliver the message and get to those kind of things. So when I give you this big number, an awful lot of thought process and intelligent work goes into kind of making this sing, so to speak. And I don't have a lot of data. You and I could sit down and I kind of walk you through it, but that's in a nutshell, that's kind of how it gets done. It's a very fractured media environment. So we have to put a lot of thoughtful work into, you know, how does a banner versus a radio commercial versus something else work?
Thank you.
Sorry, I hope that was helpful. Yep.
I may take you up on a session.
Happy to do that. And I'll just show you guys, this is a quick one to kind of see what that Mandy Vance TV spot, which this ran on some connected television and digital mostly. We didn't buy broadcast TV for this one.
It has been the most encouraging experience I've ever had in my life. You never know what impact you're going to have, what seeds you're going to plant, and how that's going to make a difference. So make the most of every moment because they do shape people's lives. They shape mine. My teachers are the reason I'm here today.
And an advertising kind of media buy out in the world. We try to layer this along with the Play It Forward Education. They're a little different message. They live on different channels, but they absolutely ladder up to the same objective at the end of the day, which is some favorability and some understanding of like, where do these dollars go? We obviously can't go to everybody's house and sit and give them the conversation, but we try to kind of get enough interest stirred to where they'll come to a digital channel, learn a bit more, and maybe they'll dig a bit further. Maybe they'll get interested in joining a commission meeting at some point, right? That would be like the pinnacle bit of it. And all of this is just to spark curiosity, right? And a hope that they can kind of engage with us. A little follow-up on Mandy Vance. So part of being the Teacher of the Year means you get to be part of the National Teacher of the Year. So these are some photos from Mandy and Dr. Vance as she enjoyed a dinner in the White House with the president, and it's a state dinner. And so as you can see, very formal and quite an honor. And we're very fortunate. We like to kind of, walk with them a bit and kind of get the feedback on these things because we get very invested in who these folks are. So today, what are we doing today? We're currently in market. We're just kind of working on another campaign that, again, I'm glad you asked this, Chair Southoff, like this blending that we do, right? And it's really important on the product side that we're starting to blend all of this together as well. So we worked with the traditional team to help develop a ticket, which is currently on sale, called the Visit Oregon State Parks ticket. And we have a product campaign, which is a small digital only campaign that is reaching folks through search and social media ads and banners and such, that is all about the ticket and pushing that along. Concurrently, we do these kinds of ads that are called featured funded program, and those specifically get into that authentic, tangible results of the money and how it lists. So the one that we're in with currently is please go check it out. It's a great place. This invites you to come and learn more about Shampooey, learn more about Oregon Lottery's connection with Shampooey. And we're running these concurrently. So we have a ticket kind of campaign for the love of state parks and also a tangible kind of lottery dollars and how they benefit state parks campaign. And in addition, we're doing some stuff in store. So if you guys have ever walked into one of our larger grocery stores, you'll see that we have these vending units. On the front of those vending units are a thing that we call the Attract Loop. And that's what you see here on the screen is just going through. Once somebody goes up and touches that screen, it gets into the buying process. But this will be kind of our push for a bit. So all of that culminates with this summer campaign I'm about to talk about in a second. So we're going to move into a larger brand campaign that kind of unifies all of this into a bigger kind of awareness-based message.
I like those tickets. It kind of harkens back to the 50s and 60s things that you see on the coast. So that's kind of nostalgia thing would bring me in if I could play. Yeah.
Yeah. So Commissioner Wilcox, we do, like I said, a lot of research goes into what we do. And that idea of nostalgia and A, how it plays into a ticket, but B, how it plays in generationally to the folks we're kind of, back to that branded house that we're trying to reach out to. So I love hearing you say that. So it makes me feel like, great, check mark, mission accomplished, because that's really what we are hoping to do is kind of connect into that nostalgia. I told you, we plan 18 months in advance for everything we do, right? I'm not going to spend a lot of time on this, but this is the stuff that we have to kind of put together when I talk about all the blending that goes into those campaigns. When we budget, we're always 18 months out because we want to be very, very real with kind of budgeting and the dollars we get. Proud to say we were at 96% of budget by the end of this fiscal year is where we will kind of end up. So we are very serious about making sure that we are on point and on budget with everything that we do. But I'm going to point out a couple things. I've got some circles that are going to go around here. The Parks campaign, I'm going to show you the commercial that's going to go live middle of this week or this weekend. I'm also going to talk to you a bit about supporting the transition potentially as we look at walking away from Lucky Lines and moving into Cash Pop. And then I will show you a little something. If you don't know, Lottery's 40th anniversary is coming up next year. I'm going to show you a little hint of what we're planning for that as well.
Chad, is this also where the director has asked you to shorten marketing time?
Yeah. So, when you look at that piece, these are the kind of the week by week windows of how a campaign shows up. So we will peel a week off the end of a campaign in order to save. And those are things that, frankly, in the way marketing works, they don't necessarily show up on a budget sheet day one. The erosion is typically a year by year around awareness and kind of the thought process and things like that. But yes, in order to kind of tighten up a little bit, we are taking a little bit of time off, along with some other things. There's several other things around production and other things that we've cut. So we really try to take, again, a more holistic approach as opposed to just saying we're going to go dark for 2 months. How do we kind of shorten this up to still have enough effect for that? But yes.
And are you going to have a way to track that to see whether or not, did we get the bang for our buck?
Yeah, absolutely. So again, I kind of shared with you like the very high level, like impressions, for instance. So we'll see what that does to impressions by shortening up a week. And absolutely, we'll probably report back on kind of how we go about that. But again, like the tangible results on the things that we often invest in sales and things, those don't show up 1 month later when you start to cut. It's typically 2 years, 3 years out. So I talked about that State Parks beneficiary campaign rolling up. Again, this is a sneak peek for everybody of the connected TV and broadcast spot that we're going to be running here soon.
One scratch it, please. Playing the Oregon Lottery supports rising with the sun in our state parks, or staying out late with the stars. Because dollars from Oregon Lottery play go towards things that support more recreation, like accessibility and maintenance, whether that involves stopping for lunch or catching it. The Oregon Lottery. Together, we do good things.
So we work very closely with OPRD when we produce these for state parks. The 2 parks that you saw in that spot were William S. Tugman on the southern Oregon coast and Honeyman State Park. Those are real Oregonian talent that we hire as the actors that kind of help fill that in. We always also try to connect in as we're kind of getting into this to some of the things that are very important to OPRD. One of the pushes for them in state parks is really getting into inclusiveness as well. So You know, accessibility is a big issue at state parks and kind of doing infrastructure changes to make it to where things are, you know, wheelchair accessible, or, you know, experiences for folks that may have difficulty in hearing or seeing, or, you know, any of these other things. And so we try to make that show up in hints in what you see. There's also a Spanish version of this spot that goes out into the world. You know, and we will be on air for this over the next 4 weeks. Again, I spoke to you guys a bit about that support of the Lucky Lines to Cash Pop transition. What you see on here is really just a concept. Okay, we've not done any real work on this, but the idea being that coming up next year, just tabbing that when we launch something, we want to do as best we can. So just we're excited about that in our department, because anytime we have an opportunity to help move along what we're doing, we're really happy to do that. So again, big circle we have on the calendar. And then finally, we're looking at celebrating in a small way 4 decades of good things in April. Sold our first ticket ever in April 25th of 1985, so we're hoping to coincide around that time. And my team is working again, collaborating with the traditional team on a limited edition $5 40th anniversary ticket. It'll be a spring campaign to kind of support and really recognize the positive impacts of lottery. Very similar to everything I just showed you. We want to kind of get into all phases of what we do, talk about some community gratitude, get into some staff retrospective. 40 years of people. We got a lot of folks that have worked here 20 plus, 30 plus years at times, and some press outreach. You know, we don't plan to spend a lot of time on this. Sometimes anniversary can kind of be pat yourself on the back. We really want to make it about celebrating all the good things. Again, something exciting for us. We crossed that, we're going to cross over that $16 billion lottery generated revenue transfer number by that time next year. And there's an awful lot there to celebrate. And with that, that's all I got. Any questions?
Questions, comments from the commission? Thanks.
Thank you.
Thank you, Chad. All right, next we're gonna talk about the video lottery ecosystem and get an update from Lindsay Peterson and Spencer Haley. Clicker's right there, Spencer.
Thank you.
Oh, okay. I'm fine. Okay.
Ready? Yes. Awesome. Chair Sathoff, Commissioners, Director Wells, for the record, my name is Lindsay Peterson. I'm the manager of the gaming products portfolio at the Oregon Lottery. And Spencer and I are here to share some more updates on our ecosystem work, mostly some of the impacts and next steps for that effort.
Chair Sathoff, Commissioners, Director Wells, thank you for allowing us to come back and revisit it. It's been a few times over the past year. Unfortunately, we don't have any commercials. We have a lot of line charts and and data tables. But we're going to try our best to keep this engaging. I know we're shy of a break here, so we'll try to keep it engaging. To kick off this update, we're really going to focus with some long-term trending to kind of set the stage. What is the landscape of video lottery? We get hung up in month over month, quarter over quarter, how are we doing against forecast, but just taking a little bit of a peel back. And 3 of the big measures we truly look at every single activity we do, and just in general, revenue coming from video lottery, active video lottery terminals, and retailers. A lot of relationship between the 3. In this, you'll notice, despite 14 years of some gradual erosion across both the video lottery retailer and terminal base over time, revenue has seen some sustained growth. If we don't factor in inflation, it's amazing growth. If we do factor in inflation, it's still nice and respectable. With that, the greatest revenue jumps, you might have heard definitely with, or I believe Josh Lehner spoke earlier, we did see a lot of the revenue jumps post-pandemic. Folks that just didn't have a lot of the other recreational activity and spending available to them, and a huge influx of economic aid that was distributed across everybody. Since then, we've seen some stability, again, month over month, kind of and year over year lately seems to kind of paint different pictures depending on where you look, but the stability coming out of the pandemic on the revenue front has been pretty good. With the retailer count and the terminal counts, that is one that even though it was on that slow degradation over time, COVID did rock our landscape quite a bit. There was a rash of closures as businesses went out of business. We also had the retailer freeze, which is becoming a little more in the rearview mirror at this point. But for us, it's still real. We're working through it. That's going to be part of our update as well, as where we're at in that process. The good news across all that is, as we had this slow degradation of terminals, retailers, huge drop off with the pandemic, we are getting ourselves back to a point where where the trend line was almost looking like had the pandemic never happened, we're kind of getting back to normal in a sense. Lastly, these are high level numbers, and I just want to emphasize this is a great place to start. There are stories underneath all of this. This is a statewide look, counties, cities, neighborhoods, and our individual retailers. There is a story to each of those. We always want to look at this and how it is attributed and, well, attributable and attributed to the activities we're doing in the ecosystem, but also look at that lower level information. For example, buried in here in the past year, Deschutes County, amazing growth. That is one of those spots where we see demographic uplift, more people moving there, speaking to the migration aspects we were talking about. The state is one thing, but there is a lot of movement within the state. So keeping an eye on where we're seeing those transitions, maybe a few small counties that might be seeing something different. Right now, Umatilla, Tillamook. We want to just watch those aspects. When we strategically look 3, 4, 5 years ahead in any ecosystem aspects, what are we looking at on the big side, but also more on the granular side?
So I have a lot of questions about all of this. It's always good. So if I jump ahead and you want me to just hold, say you'll talk about that later.
Absolutely.
Okay. So this whole optimization of our VLTs, removing them from maybe low performing retailers. Are we also thinking, as you just mentioned, a county that looks like it's increasing, are we thinking about redeploying to areas with high performers too? Is that how we're going to optimize?
Absolutely. You are going to love about 2 slides from now. Thank you, Chair.
I knew it was in there. I thought
Absolutely. And if we get there and it still misses what you're looking for, we'll definitely talk more on it. We can talk, unfortunately, all day about this stuff. We do love it. So thank you all for entertaining us on that.
All right, so taking it down a level and starting to talk a little bit about our actual video lottery terminal replacements. Mentioned earlier in that investment fund, we now have an annual base budget of 20 million for VLT replacements. Based on our current inventory, that's about 10% of the total inventory per year. And what we wanted to show in this graphic really is that although we've been stable, this is May 2023 inventory by model compared to May 2024 on the right. And while those numbers are very similar from year over year, what you'll see is that the model counts are drastically changing because we've been out there doing a tremendous amount of work replacing old equipment, low performing equipment that no longer has service or content or anything available for the future sustainability of the product with new models. So our E20, that red one on the left, you'll see is the most drastic change. We've gone through and got almost half of those out of the market in the last year and a half. And then the Crystal Dual, Helix, and Cascada listed there are our newest products in the market, and you can see that those are starting to fill out in terms of numbers. I think the other thing about this that you might notice is strategically we're trying to balance the inventory load. So instead of having like the E20 where we had 3,400 of them, kind of a large market share for one model, we're starting to balance that more across models, which is helpful in a number of ways. It helps kind of with the array of product choice for our players, helps reduce risk for any given model, helps with planning, things like that. So all of that in support of sort of the long-term sustainability of the ecosystem going forward. Actually better. Yeah, so what was it, the Cascade is about a 3% increase over the E20 in the field trial, which was, what was that number, Spencer? I have it here. Yeah, absolutely. Yeah. Because the new technology, if you think about like phones and, laptops and tablets, like you can't get, at some point, you can't upgrade those anymore. They don't work with new systems. You can't get new content. And that's what's happened. We got the E20s in 2013. They've been out there a while. So when you start putting out newer products that you can then get those revenue spikes by adding new content and things over time, that definitely helps. And then I think just the graphics and the technology itself is more modern for players as well.
Absolutely. And thank you for the question, because one of the big, started with 3 big measures. There's another one when we look at these terminals, win per unit per day, exactly on that front. And looking at per model, but also the gaming mix they're in and the like. So, to Lindsay's point, watching what we do when we deploy the new ones. I mean, for the most part, you see comparable, they'll market share will move a little bit within models, but over time, just definitely wanted to see how it all plays out and make sure that this kind of strategy continues paying off. Okay, BLT additions, here we go. Okay, so Chair Southhoff, this I'm hoping gets to what you were asking. So we've provided a few discrete updates since last summer when the rule changes went into effect regarding removals, particularly. There was a minimum sales threshold. This is on the other side of the equation about where we are supplementing the market. And a little bit of a refresher, we conduct VLT additions into the existing market currently on a quarterly basis. And we begun with those that had the highest demand. And we look at proven demand here. And we work our way down the list. We began last April, a little bit in earnest. And throughout that cadence, happy to report we have, up until most recently, ignoring the April 2024 work in progress, 150 VLTs have been distributed into the overall market. And spoiler alert, there were a few in Deschutes County right now because of, again, back to the former trending. It has gone to 126 distinct retailers, which implies there have been a few retailers that have seen repeat qualifications over quarters. And that was one of the approaches we wanted to take in this was we can respond a little more nimbly. If there is a change to the market, change to an individual retailer, their growths are gaining, we're a quarter away from getting them an extra terminal. All of this, what has it shaken out to be? I mean, yes, 150 VLTs, happy to say 11% growth in the overall video lottery play at these establishments in a pre-post environment. So before they had the ad, look into after they got the ad.
It doesn't feel like for the sort of minimal movement, that's kind of an impressive increase.
Absolutely. And I would be remiss not to call out, that first box in April 2023, you'll see the dollars played was the highest, 35,300. So we did start at the top. And so there is a degree of diminishing returns on our way with this. We haven't experienced it yet. And as we move forward, and again, 11% increase right now with 150, translated to real life dollars, it's about $5 million to the Economic Development Fund. So that we're feeling great, at least in terms of that side, but we also have to be realistic that the further down the list we go, and when you consider each one of these assets, these terminals, $15,000 to $18,000 a piece, we want to make sure that not only the cost of the asset, but the support of it, everything else, we continue to not only avoid too many diminishing returns, and just last thing we want to do is be putting assets out where they're not doing anything extra, but also factoring in our operational expenses around that. So far, so good. And we look forward to every single cohort we do. It's a little bit of excitement, one for the folks that are getting another VLT, but also for ourselves, because it's just a little bit of more data, that we can actually look at and see where are we on this journey. And as long as we have inventory and operational capacity and returns, we'll keep going. Go ahead.
In terms of the newer machines that are coming in to replace the older ones
Mhm.
that have been there since, I think you said 2013, that technology is obviously better to offer a better experience for the player. Does it also help us at all with technicians and how much time they have to spend on a VLP?
Thank you, Commissioner Wilcox. Great question. So right now, and I can't speak to details. I'm good with numbers and charts, but when it comes to electronics, our E20 terminal, the one we're currently replacing, Lindsay showed, had the big line. That thing demands quite a bit more effort from our folks in the field. And it is. And there's little parts like, anecdotally, a button. If an LED goes out on the button, the machine comes down. Don't see that necessarily on other terminals. So yeah, absolutely. That weighs in quite a bit.
And so obviously, just looking at older models and new models, like we talked about phones, and just
Mhm.
thinking that technology is going that with this, of course.
Absolutely.
Thank
Yeah, cheers.
Is there- Sorry.
Oh, absolutely.
Is there a, this is my, however many dumb questions I've asked today. Is there a correlation between geography and low performers, or is it retailer low performance?
Retailer would be I would venture after looking at this for, give or take, better part of a decade. Whether it's, we'll say John Day. There might be two retailers in John Day. It fully supports the population of John Day, and so they're high performers. But there are other places where it's just retailer by retailer, left side of the street, right side of the street, good parking, been there 30 years, been there 1 year. It really is so much different. And that's where this is super fun and challenging, I guess, at the same time, is when we're trying to do the allocations. We're starting with the one size fits all. It's where rules come into place, $10,000 per VLT per week. But we always want to be conscientious of what are we looking at in terms of the geographic differences, because every once in a while there could be a county that just its main, if it was a timber county and something changed, we might see a major impact or a huge layoff in a certain industry. We want to be able to see that and incorporate it, but also at the individual retailer level, watch for those things, let alone formats. I believe Josh Lehner had that funny chart that had restaurants and bars and kind of was hinting at some of the hypotheses going there. And I don't want to say we struggle, but we constantly want to incorporate all of this into even little operational tactics such as these. This, what's on screen is the flip side of the additions. It's the one, it's probably not as fun to talk about, but it is the removals side of things. We've gone, you'll see that there are far fewer boxes than we had on the additions. This has been started with a little more of a modest start. We only do these twice a year, semi-annually instead of quarterly. There's a few more, I don't want to say rules around it, but more choices where we only remove terminals once per year from retailers to make sure to limit any escalations of what the impact could be. Further, we will not remove if somebody only has one terminal, we're not removing their final terminal. We started with 25 in October 2023, and I am going to caution the results that are at the bottom of this because it's counterintuitive. We removed terminals, yet we had increases. Right now, the 25 we removed in October are showing an increase. That is loaded with some caveats. I think there's some asterisks with some almost impossible to read text at the bottom, but in a nutshell, small sample size, 12 of these 25 have lower revenues right now. 12 of the 25 have higher revenues and one terminated. That's also looking into after October, we go into our seasonal peak. So it's a really unfair time to also be looking at a pre-post kind of analysis
This
here.
goes back to my question. So I'm trying to figure out, is it because reducing the amount of terminals to a retailer improves their performance, or is it literally the geographic area getting rid of reducing terminals in a geographic area? improves performance?
And that's a tough one to test out right now at the scale we're at because it's 25 scattered over the whole state. And what we've seen with a lot of anecdotal, some granular data look at is utilization of terminals. And that's the other thing looking at is seeing before the removals, there was plenty of capacity. So you remove a terminal, there's still capacity. And because we are starting with like the 25 in October 2023, absolute lowest performing retailers out of our 2,100. And so I would all but guarantee plenty of capacity was at these locations. So really bad sample size to, again, I would almost block out those bottom results and say we need more time to see this. Also, we have 25, again, slow, steady, methodical approach. We did 25 in October, 25 here currently that just came off of April. Wanting to see what the true impacts are over time, absolutely testing those hypotheses. If we see some that are in a clustered area, it might give us a little more insight on that side. But it is truly a test and learn, and just wanting to make sure we minimize. We're not doing any of this to damage the market. Whereas at least with the ads, we can see a pretty significant jump. With the removals, it's that tandem. We want to make sure that both activities and hand in hand are really giving us that net benefit.
Spencer, although this is a small sample size, we see the movement of play also when we have an outage, for example. So we also can anecdotally through other experiences see that if one terminal type goes down and the other terminals are still working, the gameplay just shifts. So I think it helps support your analysis here.
100%. We actually did see an outage recently where that 100% was the story. Now, you gotta be careful because also if it's happy hour on a Friday and everybody's sitting at those chairs, it's full capacity. But
But presumably reducing in low performing retailers or areas ought to reduce our operational costs in some way.
Absolutely.
So that we get to a double bang there. It's like,
Absolutely.
yeah.
And by, again, kind of that conveyor belt model is by reallocating terminals from bottom performers. Say it just goes to another retailer that is deserving, that's $18,000 less that we didn't have to spend. So 100%. All right, thank you.
All right, so that was all equipment based, but we also had some new retailer applicant stuff happening as a result of the pandemic. We've been here several times with updates on this as we've been processing applications. We started up a wait list. There's some pent up demand, and today we're happy to share that we have gotten through 97% of our all-time video lottery applicant wait list during this time frame. So there were 396 total, and so we've addressed 97% of those. So since September of 22, we've had 87 applicants approved through that process. 64 are still in process, and we've had about 13 still on the wait list at the last update. This chart, much like the other chart Spencer just showed, there's cohorts. So we did, as we had operational capacity and inventory, we would pick a certain number of applicants to start putting through the process. So you can see, I think there's 7 cohorts here. Overall, kind of varying degrees of people passing, but on average, I think it's about a 40% success rate among those who applied. So although we're winding down the wait list, we did put rules in place around a wait list because we think that's strategically an important lever for us going forward to be able to throttle if we need to on resource capacity or inventory, things like that. So there may be times where that ebbs and flows based on what else we have going on, because we need to use, again, optimize the use of the equipment across all of these activities, this just being one of them. So we'll keep you updated as we're working through that. But right now we're getting through it, and we're pretty low. So that's good news. So finally, just a quick look at what is next for us. FY25, varying activities sort of across the ecosystem. We're going to continue to formalize and improve some of the processes that we've built. We're going to dig deeper beyond equipment, start looking at some content stuff. We're going to keep replacing terminals at this set cadence that we've established with the $20 million. We're gonna be upgrading our gaming network, and we're gonna keep working through equipment management, so move more cohorts, trying to, get the right size of the market ultimately is the goal. We'll have some field trials for purchases the next year, so a lot going on. But what we've done the last 2 years was probably the biggest piece, I think, of this effort in terms of getting, the revenue benefits and the asset, optimization piece. And now we'll just refine some of that and dig a little deeper.
And add on to that, having kind of just participated in this over during the pandemic time to today, it's been stabilization. It's where it's not so lovely to actually be providing this update, because we went from a place of not stable 2 years ago. And to see all this kind of coming through, the wait list diminished, these equipment management efforts in place, and it's such a huge cross-functional exercise, everything from retail contracts, operations throughout, that seeing where we were at in some, I don't know, pseudo-crisis modes to where we are now, and this kind of planning activity, and it's a good feeling. So just thank you all for allowing us the chance to kind of provide those updates.
That is it for us.
Yeah, I think just my quick add is, when we have seen that video revenue has flattened, right? This was certainly a concern of ours as well, and I know it was a concern of yours, but I mean, we are confident that what we are doing is not what's causing that, right? That this is actually maximizing the use of our terminals, it's lowering our operational costs, but it is not what's causing that flattening of revenue.
I never really thought it was. So we looked at this, some of you were on the commission, when I first came to the commission, we looked at this, and there were a lot of political, political barriers to doing what I think you're trying to do. You guys have done this in a really thoughtful way. I don't think you're getting that kind of pushback on this, but I mean, I think for a long time we've looked at it, we need to find a way to optimize what we've got. So I think this is great work, so.
Thank you.
Thank you all.
Yeah, thank you, guys. Okay, break time. So we'll
Yeah,
take a
great.
15-minute break.
Thank you.
Next up, we're going to talk a little bit of the retail partner management system and some updates. And so Alex is here to do that for us. So it's all yours, Alex.
Yeah, good afternoon, everybody. It's been a while since I've seen you in person or meeting you for the first time, Commissioner Weller. My name is Alex Hamilton, Senior Manager of Business Operations. As Mike said, we're going to talk a little bit about retail partner management. It's been a very long program, transformative to say the least. And I don't think we've actually been to a commission meeting to talk about this in very much detail. So there's going to be a bit of background to get you guys up to speed, provide some context that maybe you didn't have previously. So we will start with that background, give a program definition, talk about the goals, departments that have been impacted by this program, as well as what legacy technology we've been targeting. So as a reminder, this is all about our implementation of Salesforce. We are targeting, or excuse me, the overarching goal here is just to provide more efficient, easier retailer support. We've got several large departments that are responsible for doing that. We're approaching the implementation as part of a multi-year program, and not only prioritizing the modernization of the technology, but also our business processes. You can't really just gut the technology and expect it to work more efficiently if you don't change your business processes. So that's been a critical part of this program. On the right side, you can see which teams that we're focused on and their respective systems. That's the initial focus of this implementation. Anything beyond that is going to be captured and prioritized in a backlog that we can determine whether or not we address it in the future. The interesting part of this program is that historically we've been very much an on-prem technology company. This is, in addition to our financial system most recently, this is another step in the direction of cloud-based technology, something that we aren't that familiar with in the organization. So it's bringing a requirement for new skills to not only help maintain the platform, but also consume insights from the platform. Our goals that we've held true to over the last few years, and you've heard this a lot, Commissioner Patel, you've actually asked a question recently about we want to be more data-driven. We're going to talk about how this program is doing that. Part of the way that we're doing it is providing an increased visibility of all of our retailer interactions. Also improving the experience of not only our players and our retailers, but also our employees. We're trying to not only reduce risk and technical debt, but improve operational efficiency like we talked about. And along the way, find ways to reduce our support costs, which the acquisition of new technology brings new licensing costs, implementation costs. So right out of the gate, we're not actually saving money, but over time, as we mature with this product, we should get more efficient with how we're supporting our retailers, finding more low-touch self-service options so that we can start to realize some cost savings long-term. And obviously, we can't forget about our values, FISH. Anything that we are doing with this program is going back to fairness, integrity, security, and honesty. Again, a little bit of context setting. I'm not sure how familiar you are with some of these teams that we're focused on that support our retailers. We'll start with the call center. They provide service to players, retailers, and employees 7 days a week from 7 a.m. to 8 p.m. They got over 4,000 touch points every week. And the most common touch point is, I'm a retailer, I have a video lottery terminal that's not functioning, I'm going to call in to try to get that resolved. If I can't resolve it over the phone, we dispatch a technician to resolve that issue on site. That's where technical services plays a significant role. Technical services is several teams that are really responsible for the repair, maintenance, and provisioning retailers with equipment, focused on the support of our nearly 11,000 video lottery terminals across the state. On the more soft side of the relationship, our retail channel team is focused on the relationship management, serving as that trusted advisor and trying to leverage that relationship to support lottery initiatives. And then last but not least, our retail contracts team. They are the entry point for the retailer lifecycle. They facilitate the application process for retailers that are interested in offering our products, as well as ensuring the ongoing compliance of that contract over time. So this is the initial focus of this program. And the tools that they have been using over the last, in some cases, 30 years, these are what we are targeting to replace. Our hotline dispatch support system, or HDSS, and this is probably the worst offender, 30-plus year technology, had not seen an upgrade in decades, really responsible for our core case management for the call center, where they would log problems and solutions and dispatch technicians. That has been replaced. It was in a state of complete disrepair, though. Constantly crashing, risks of data loss, users would get locked out of the system. They would have to revert to manual workarounds to do their work. It was long overdue to be replaced. OrderPad is what our retail channel team used. It's how they've tracked their retailer visits and the activities that they were performing on site. It was owned and supported by IGT. However, in the last couple of years we had that platform, it was no longer being supported. So it was on the lottery to maintain that. And as we were approaching its replacement, we started to have more and more stability issues, much like HDSS. RMS, on the other hand, which is our retail contracts system that they use. It's the central hub of all retailer data. It's where they process applications and track compliance. It is relatively stable. We're not having the types of issues to maintain that platform as we were with the other systems. However, it is a homegrown custom application that has kind of handcuffed us in terms of being able to adjust based on our changing business needs.
The OrderPad, you said that it's no longer supported, so we're doing it. Have we replaced that yet?
We have, yeah. We're on the last leg, which we'll get to that program timeline. We were the last lottery actually on OrderPad at the time that we replaced it. And we were constantly getting urged to do something about it. Okay, so what has been our approach? We knew that we needed a platform, we needed an implementation partner. So I want to talk a little about how we landed on those selections, talk about where we're at in our program timeline, and then how we're actually delivering this system to our end users. So this started back in 2021, where we released a request for quotation to find the platform that we felt would fit our needs. We wanted something that was scalable, something that was cloud-based to help us modernize how we support our retailers. It was a pretty quick turnaround. The systems that we were seeking out were pretty straightforward, so we were able to accomplish that in a few short months, ultimately selecting Salesforce as our preferred platform. Also recognizing that we are not an in-house development shop. We don't implement technology. We wanted to have a partner help us through this. So after the holidays, we launched our request for proposal to find a partner to help us not only plan and design and implement a solution, but be that long-term partner to help us maintain and enhance the system over time. It's a bit more involved, but it was kind of a unique approach that we hadn't taken before. Let's pick the technology that's going to work and then find a partner that specializes in the implementation of that technology. It was about a 6-month process, and we landed on Deloitte as our preferred partner. So where we're at in the timeline. Following the completion of that robust strategic sourcing effort, we went into a design and discovery phase in the summer of 22, where Deloitte was immersed into how we operate as an organization in supporting our retailers. They mapped out our current processes, understood our pain points, re-engineered those processes to fit with how it could work in Salesforce, and then also came up with a game plan for how are we going to tackle this. Where we landed was a phased approach. We could have taken this on all at once. It would have delayed the value that we could see from Salesforce, and it could increase the complexity of the implementation significantly. So we tried to go after the most critical systems that were on their last thread, basically, and also the low-hanging fruit in terms of simplicity. So HDSS was pretty straightforward. It was a case management system. We felt like we could go live with that relatively quickly, and we did. In a matter of 5 short months, we replaced HDSS and onboarded our call center and technical services teams in May of 23. Following the replacement of HDSS, we went right into the replacement of OrderPad. That actually just went live in January. And in parallel, Chair Southoff, you actually asked a really good question about continued support and a feedback loop for technology. We'll talk a little bit more about that in a few slides, but that's the intent of the maintenance and innovation track, is so that we don't get this solution stale and that users are continuing to see improvements along the way. We've since kickstarted the replacement of RMS. We're at the early stages of that program. Following the completion of our phase 4, we're going to launch into an evergreen phase, which is yet to be defined. But any future system that we want to try to migrate to Salesforce or new capabilities that are beyond small enhancements would fit into a future phase. Not going to spend a ton of time on this, but this is also kind of a new approach that the lottery took in terms of system implementation. We have a strong history of waterfall delivery where we do everything all at once in each of the work streams, where we collect requirements, we design, we develop, test, train, and deploy. But we don't actually go back in and follow a feedback loop like what you were talking about earlier. In this case, we are using more of an iterative approach where, say, we have 100 requirements. We're going to chunk those out into sprints. We'll take 10% of them, work them through a full development cycle, respond to user feedback, make adjustments to that 10%, and also inform the remaining 90% so that when we actually release something, it's what our end users are actually wanting. It's kind of hard as an end user to say, here's what I want the system to do, if I've never even seen what the system can do. What this leads us to is what you've heard before, minimum viable product. We're not seeking perfection. We know that there's going to be some gaps, some missing features, maybe some integration improvements that we can make. We're not going to catch everything. We're catching the 80 to 90% of the most critical aspects of how they do their job so that we can migrate them to that new solution. Anything that we missed is getting captured in that backlog.
I tell you, we've also found that the agile process where you do the feedback, you integrate, you do the feedback, helps with this because people don't have these huge expectations and then they're disappointed.
Right.
And they know, well, this is just a piece of it and they're going to fix it and we're going to move to another piece. It's a much better way to deploy this stuff. But
Absolutely.
again, from bad experiences.
We've had some ups and downs as an organization. I think we've taken a lot of those lessons learned and applied them to this program, and we're seeing the benefits. So what have we executed to date? We'll recap some of the systems and processes that have been modernized as part of this program, how we're doing on our user adoption, the impact to our data, how are we becoming more data-driven, and then what are we seeing in terms of the output from our maintenance and innovation work. So now I talked about the big three, HDSS, OrderPad, and RMS is what our target was. But along the way, as part of that discovery, we found other ancillary systems that could easily be replaced as well. Other manual data collection methods via spreadsheet, old technologies that were being shared on the same servers as some of these platforms. At the conclusion of phase 4, we will have replaced 13 legacy systems. Process improvements are just as important. So at the conclusion of phase 4, we would have also replaced 62 manual processes and forms. So this is a significant overhaul of how we support our retailers. It's transformed how we support our retailers. We'll have 75 legacy systems, manual processes, data collection tools, and forms that we have replaced as part of this program. User adoption is looking really great. Over half of the organization is currently using Salesforce. Not all of those users are facilitating their work through Salesforce. Some of them are read-only users that are just consuming information. By the end of phase 4, though, we're going to be nearing that 75% mark of the organization, 300 users in Salesforce. We saw a spike in our daily active users after we went live with the OrderPad replacement, and right now we're hovering about 120 people every day going in and facilitating work through Salesforce. It's going very well. Okay, the data, which if I've talked to you in the past, you know that's my background. The operational health metrics are pretty exciting. Some of these we had access to with the old systems. However, the introduction of Salesforce has improved the availability, accuracy, and granularity of some of this data. And it's actually kickstarted within the gaming operations division to look at maybe what's our North Star, what's the identity that we want to have. And so it's not just about one of these metrics. What we're talking about is high quality, delivered on time, profitably. And so that is in the works. Some of the things that we can do now with much more ease is look at how long it takes for us to process cases as they're coming through. If I'm a call center representative, on average, I'm getting through a case in 4 minutes. I'm either resolving that case or I'm determining that I can't and I need to dispatch a technician. If we dispatch a technician, it takes them 27 minutes to get to the site. They're on site for 24 minutes to resolve that problem. What percentage of the time are we actually having to dispatch a technician versus not? And what's a real step in the right direction in terms of quality measurement is, what's our first time fix rate? If I have an issue on this particular terminal, do I see that same issue on that terminal happen within the next 30 days? Or if I've actually resolved it the first time? Additionally, the mean time between failures. If I've just fixed something on this terminal, how many days do I see another issue, potentially unrelated, on that same terminal? On the right side, we're starting to look at more proactive maintenance. So our technicians are going out to the sites, cleaning them up, polishing the equipment, trying to prevent reactive service as it comes up, as well as when we have a retailer that closes its doors or a piece of equipment that is so bad that we need to take it to the warehouse, we go through a full refurbishment process. So both of those proactive efforts, we can track how soon do we see an issue on those recently refurbished or prevented maintenance terminals.
The 93 days average between failures, is that same machine, same place?
Mhm.
So about 3 months. Is that good?
So that, great question. We actually don't know. We're still in the baselining phases of this could be great. We're determining what the trends look like for our current state. We will be doing some industry comparisons in other projects to figure out what should our targets look like. What's a band of acceptance on some of these? We're actually ahead of what the manufacturer is recommending, I think. In terms of preventive maintenance, we're more proactive than what the vendor is actually suggesting.
Yeah, I'll just, add, this is super exciting for us because we have not had this granularity. So it's kind of new, but obviously, as you know, in all of your industries that you work in, right, with these type of stats and this type of information, we've got a baseline and the improvements organizationally that we can make here in the way we offer services, the way we allocate staff, resources, et cetera, are huge. So
It gives you data too for continuous improvement.
correct.
I mean, 4 minutes sounds like a great time, but maybe you target, we're gonna get down to 3 minutes.
Exactly. Yep, exactly.
Maintenance and innovation. This is the benefit of that continued feedback loop, the continued look back in terms of how we can improve this system. Ultimately, this is all about trying to maintain a high level of user adoption. There's a reason that we had spreadsheets in place as data collection methods. It's because the core system wouldn't do what the user wanted it to do. And so the business will find a way. And that is the introduction of smart sheets and Excel files and access databases. So with the focus of user adoption in mind, we're actively trying to address any pain points, leverage new capabilities that maybe Salesforce has released recently, improving business processes. That's all on the front end. But also on the back end benefit of maintenance and innovation, we're trying to remediate any security risks and also avoid any sort of technical debt, which we have a lot of experience with those legacy tools. To date, since we've been live in May of 23, we've completed 418 work items. Doesn't really mean much unless you know what these are, but we've addressed 159 bugs and made 259 other small user enhancements along the way. Our backlog has been pretty stable at about 205 work items in the queue. That's going to start to go down the more that we get comfortable with this system, the more it's stabilized. In fact, we'll see a bit of a spike after we replace RMS next June. But over time, these are systems of record. This isn't really going to change too much once we get really comfortable with it.
So the 205 backlog, you think is a pretty standard, that's gonna go down, but it's gonna stay about the same over time? Or do you think that's gonna go down a lot?
It's been about 200. I think it's going to continue to go down once we've stabilized. what our long-term vision is for continued maintenance and innovation or a vendor-led model, that needs to be discussed still. In fact, we're talking about that with exec team in the next few months. We want to make sure that we are not getting stale. We want to make sure that we're able to leverage that new technology, but at a certain point, we're accomplishing what we need to accomplish with these systems, and the business units are getting what they need. And so it will slow down eventually. We don't really know when, though. All right, just to close out, talk a little bit about phase 4, which is that RMS replacement, and then what does retailer support look like in the future? We are, like I said earlier, at the very early stages of our development of a phase RMS replacement. Between the functional development, preparing for migrating data, and the data integration, that'll run through January of 25, where we'll go into very in-depth testing, hands-on user training with a deployment targeted for June of 25. In the prior 3 phases, we have not missed a deadline, and we have come in on budget, the contracted budget in each of those phases. So we have been incredibly efficient with this program. In parallel, we're going to continue with M&I. We've got 11 releases that are scheduled. We don't necessarily know what is going to be accomplished in each of those releases yet, because we're taking them kind of reactively as the feedback comes through. But we do have a plan for continued improvement. And as Mike mentioned, the retailer contract extension is a critical part of this plan. We're shooting for July through October to complete that work, but this program was one of the few reasons why we wanted to pursue that. The current contract expires in June of 25. We did not want to have to juggle this collision of replacing the system that facilitates that work and actually do the work to renew those contracts.
When is the plan to start negotiation or start planning for negotiation for the renewal? That's why I was wondering. Okay. Yeah. Okay, that's why I was trying to connect it up with the timing here. Okay.
It's tight
Yeah, very
timelines.
tight.
Yeah.
Okay, this is kind of a fun visual for me. This is how our retailer support model, at least from a technology perspective, is going to change. In the old days, we had those 3 disparate systems, lack of integration between those systems. It was really kind of a one-way street for RMS to send data to OrderPad and HDSS. Inefficient communications that weren't happening within the systems. So if I was a call center employee, I couldn't actually share work within RMS and vice versa. I couldn't use any device type I wanted. If I wanted to communicate with my peers in other departments, I would be using email, Teams, phone calls, texts. In the new world, we are having a single system that's fully integrated for these teams. Everybody is sharing work, shared visibility of what they're doing within Salesforce. That's really leading us to that richer data as part of a 360-degree view of our retailer support operations. And if you're a field staff member in our retail channel or technical services teams, you're able to do all of your work from your mobile device, which is pretty new for them. So we're seeing some big wins along the way. Still a lot of room for improvement, but this has been a successful program to date. Any questions?
Questions or comments?
I'm just thinking Salesforce is gonna make hopefully a lot more productivity within the program, and that's great for the lottery and great for the state of Oregon, so thank you.
Yeah, thank you.
That'd be a good presentation. Thanks.
I'll just, add on that this is part of that, try to find our core systems, get everybody integrating in core systems. This has not been a cheap endeavor. It's for sure. It's taken a lot of partnership with Deloitte and a lot of resources to do this. But, as we're talking about limiting all of those other programs, all the security risks that come around with all those other programs, getting to a few core systems that we can actually maintain is the vision, and we're getting closer to that. Alex has been instrumental in getting us to this point, and we will definitely, I know we're going to make the timelines. We've been on time for all these, and so super excited for the future.
Are you guys doing a lot of customizations?
No, in fact,
Yeah.
they're There will be more customizations because of the regulatory limitations that we have on the retail contract side. I think the last time I had checked in with our Salesforce administrator, I had heard that we were at about 89% configuration. So the customization has been very limited, which is only going to make future maintenance easier.
Yep. That's excellent.
Yeah, that's one of the biggest problems that we have had historically is everything here was custom. And even from our gaming vendors that provided us things, we went and customized them on top of that. And so it's just as big. It is something that are actively trying to stay away from is customization, especially with the cloud services, so that we can have updates regularly. We don't have to worry about all of those additional issues. So
So just say no when they want.
just say no.
Just say no.
That's good. That's
Doesn't
our
make
new
me very
motto.
popular, but yes.
I like that. We're going to adopt that. Just say yes.
Yes, you can. Also.
Okay.
All right.
Thank you, Alex.
Thanks, everybody.
All right. We have one more presentation. As I said, we're going to just do a quick update on where we are with governor's expectations. And so I'm going to throw it back to Christy.
Yeah, so sorry to be your last presentation before the end of the day, and to give you a terrible eyesore chart. So I will summarize it for you. We had 13 governor expectations provided to us in the last year. And these list out the 13, kind of that expectation, high-level summary of what that was, and then what our result is. So the first expectation really is performance feedback for employees. So we have several, they kind of fit into a couple different categories of all these 13. We've got the strategies that you saw today, the DEIB strategy, the IT strategy, our strategic plan, and then our succession plan. Those were all turned in, submitted. We have a couple still waiting for, we got a verbal approval, but waiting for final approval from DAS. And then several new hire customer service, satisfaction type expectations. We are all in compliance with all of those, and meeting or exceeding the expectation with those, as well as our agency hiring time to fill numbers. And then a couple other plans, agency emergency preparedness, that plan was submitted and approved. And then audit accountability is just with the Secretary of State audit findings, and we don't have any of those. So we are in compliance with that as well. So these will be continually updated. The plans have revisions each year. We continue to quarterly report on these to DAS.
You have a 50-day term for agency hiring. It only takes you 50 days to replace.
Yeah, we're actually at 43.75 this last quarter. So yes, we've been doing a lot of work to streamline and make that more efficient.
That's for all but executive positions is the expectation out of the governor's office. That's for all state agencies is time to fill must be 50 days or less. So
It's at least a 3-month time.
yeah, it's a challenge. And I've heard from some of the other directors that they're having difficulty with this, obviously. Everybody is, but my understanding is there were across the state that there were some agencies whose positions were lingering out there for 9 months plus. And so it was really just trying to shorten this, but it's a short timeline. I mean, from an HR standpoint, this is difficult. They are working diligently to make this happen. So
Yeah, a lot of prep work. So we do a lot of work with hiring managers before we
Before you
post a
post.
position,
Uh-huh.
because that's when the timeline starts.
Right,
So,
exactly.
there's some tweaks to process and things we've been trying to work
So
on.
I'm gonna at least lie to myself and tell me it has to be because the lottery is a very coveted position that you're doing so well in this. Okay.
Yes.
I feel to hear about that.
It's an average,
Yeah.
so that works well for us. Some of our positions are super quick and others take longer, so. So yeah.
Yeah, I put this in here just, this is all new. This is all new expectations that we're having to follow and track and manage. And, some of this stuff we were doing, I'd say most of this stuff we were doing, but we weren't really tracking it at the level that was expected from the governor's office now. So, this is just taking a little extra time for us to keep up and track and manage and report in, but it's all good, right? It's kept us honest, and now we have some KPIs to follow. And I think from a statewide perspective, I think this is good for the state, right? That everybody's has some similar metrics that we're reporting in on. It's created some cohorts for different agencies, DEI cohorts. So state agencies are coming together and talking a little bit more than we have historically on a lot of these things. So
Do you expect any issues or feedback time on the strategic plan for them to approve it?
we've basically gotten the nod on all of them. I don't know when we're gonna get official approval, but on all of our plans have been submitted in draft form, and the IT plan had some feedback, and we've corrected that and sent it back, and we're good. So I think we're sitting well with all of those.
The DE,
Did the new employee orientation program start after you started tracking the agency hiring?
So we've had new employee orientation for as long as I've worked here. We,
6 new employees.
yeah,
like,
so
hired.
in this last quarter, we just
okay.
had the 6, but all of our employees go through a new employee orientation. It's very formal and it's required.
I think the newest thing on here, Christine, correct me if I'm wrong, but probably the one thing that would be new to us would be submitting or a couple things, the strategic plans for IT and DEIB, and then the new manager training. We weren't doing that historically. That's new for us. So everything else we really were doing.
Who's approving of the governor's office for the DEIB and the succession plan? Is it like from DAS and they're looking at everybody's, or?
Yes, so the governor's office has a DEI coordinator
Right.
who's kind of managing that. And approval is probably the stronger word. It's acknowledgement and review to just ensure we have a plan. The DEI plans are where you are in your agency. So each agency's DEI plan is at very differing levels. Ours is pretty robust and pretty aggressive, frankly, compared to some of the other plans we've seen for agencies who are we're just starting out. So.
Yeah, I would say that some of these plans, the succession plan, I know the IT plan, they had some pretty specific things they wanted to make, and I think this agency strategic plan as well. There was some specific criteria you had to have in there. Now they're not coming back to us and saying, no, that's not the right criteria or the right description or whatever, but they want to make sure there's certain things included in those plans.
Yeah, like the PESTEL and the SWOT analysis in the agency strategic plan, that's required in all plans. SMART goals are required in all plans. But the depth of the content is kind of where each agency is, so.
Thank you.
So that is all of our prepared material for today. Feels like that was a lot, but really it's just open for questions, discussion, anything that we missed that you guys wanted to talk about.
Well, I've obviously asked a lot of questions along the way. I don't know that I have anything right now, but the rest of the team here, other questions or comments you have, or any?
Really complimentary of everyone's presentations to us, and open to our questions, if we could say are silly sometimes, but no, it's highly appreciated to everyone that presented.
Okay, thank you.
As the newest member up here, very educational, well presented, well researched, well done all the way around. I am just overwhelmed with the information, but I am very impressed with all of the work that's getting done here at all the levels. starting with Mike and all the way down. It's refreshing to me. I've been in the accounting profession a long time. And this is one of the best presentations, if not the best presentation of what we're doing, where we are and where we're going that I've ever seen. And I thank you for that.
No, thank you very much. Yeah, we have amazing staff. I also learned things today and over again preparing for this. So, you know, it's a complicated business. It's a complicated political landscape. It's a complicated industry to manage. It's expensive. And we have a lot of beneficiaries we provide money to, so it gets complicated, but it's fun. I think staff enjoy sharing because sometimes, you know, it's educating people and showcasing what we're doing and where we're going is enjoyable for us. So I certainly appreciate the time that you guys have dedicated to listening today. It's been a long time, like we said. It's been a couple of years at least since we've done this. So it's hard to get this all into a 1-hour commission meeting. So thank you guys.
Yeah, I am, I too, you guys hear me all the time. I'm always impressed with this organization and what you produce and how you manage this business. And there have been ups and downs over the last however long I've been doing this, but consistently produce great work here. And I just really appreciate all of the information today. I do want to say, I think some of this is, you know, it's got to sink in for a little bit, and we've got to take copious notes, as you've seen. So I may be coming back and saying to Mike, could we address this at another, in a 1-hour meeting, follow up on this and have some questions about it. So
That's great. And I have taken some notes today on some of the outstanding questions you have, and we'll be sure and answer those too.
yeah. So unless anyone else, go ahead and, yeah, okay. I gotta get my, Elise's gotta tell me when to start, go, stop. This concludes today's meeting of the Oregon State Lottery Commission. The next meeting is scheduled for Friday, June 28th. I want to thank you all for attending today's meeting, and the meeting is adjourned. Thank you.
Question.